Good morning, everyone. Is it Jamie's? Uh, I think it's just resolving some of its negative arbitrage. Not much of it, but a little bit. SPX is still going to open under the collar, but back up. My mic's already pretty loud. I can't really turn it up anymore. Good morning. I'd like to use this opportunity to thank the hardworking folks who've been gifting me enough memberships to get this milestone chat. Thank you. Thank you, Dork. Thanks, Jets fan. You too, man. Ding ding. Increase output on OBS by 3 to 5% should solve the issue. I also think you're quiet. I haven't changed anything. Not an option. Hmm. How's that? Is that better? I'm not quiet? Why don't people get better fucking speakers? Good morning, Pickle Man. I hope all is well. Yeah, I think so. So puts above, calls below still. Yeah, it's still in place as far as I'm aware. I would probably wait for any kind of positioning until like 9:48 when I have an updated idea and make sure they haven't started to roll it. When guest stream host a DFE? I could ask. I don't think he'll do it though. I haven't banned Darth Dan yet, so quiet for people on mobile always has been. Interesting. Can you whisper your 3815 calls are gonna print? They might. We could also just get hung up at 3815 and then fall back down to 3800. The jobs data this morning was pretty good. Something big about to happen. I don't know. What kind of big thing are you looking for? Did you see the CBOE call to put ratio? Are you talking about for January 20th for the leap expiration? In which case, yes. Move volume for 3835, signal a rolling. Yeah, it would. Although I don't think any of us are gonna get that live. Close, but not live. What's all this DFV talk last night and this morning? Well, that was kind of like an aside on something I was already looking at, but I'll go over it in a minute. Probably around like, I don't know. The market looks pretty boring this morning. Maybe I'll go over it sooner. What brand of luggage do you use? I have a backpack. Yeah, I'm gonna jack. I'm late. Not first. Life ruined. Nice shirt. Thanks, Carl. Yeah, you're usually not first. Just seems like something I should mention. Group became the thing he swore to defeat. I mean, not really. The DFE tweet has nothing to do with the thesis about how the deferrals work, but it was interesting. And there's more to it than just DFE tweeted a thing. Shut up, I am. Okay, I'm sorry, Carl. It's sure. You're always first. You're always first in my heart, Carl, which is all that matters. I'm not friends with DFE. Who do you think you're fooling with that name, Wound Man? No, DFV didn't tweet. Jesus Christ. It was December 2020, not 2021, but look at what you started. Yeah, I know. I already regret finding that correlation, but it still needed to be said. I'm not DFV's enemy. I don't know him at all. Question everyone is dying to know. Would DFV buy Fubo? I don't know. I know it was, I mean, back in like the early days of GME, Fubo was doing a lot of the same crazy shit. So I'm sure it drew his attention at some point, but I don't remember him ever buying any of it. It's been 84 years, and I still remember it like it was yesterday. Some hot redhead, Pi-Fi. Okay. It's provocative, and it gets the people going. I was aware of how provocative it was when I posted it, but it still needed to be posted. So now you can defer a deferral. Explain. Oh, we're going to. But hold on. I need to work on my straddle here for a second. I'm not DFE. Have you ever thought the roaring kitty that drops in every once in a while is actually DFE? No. I mean, there's no way to know because it's just a YouTube account, but no. I will say he has a weird amount of like knowledge about DFE and Boston. I don't dislike him. I've seen his torso. It's not equestrian. All right, this is starting to look okay. So I guess where to start. So last night I was kind of digging into. I was trying to kind of like break down the trades that would occur for OPEX to happen via our theory and how that would apply to various deferrals through FINRA over. And I mean, this part of the year particularly is really annoying because you kind of have one deferral that runs into the next deferral that runs into the next deferral that runs into the next deferral, right? As we move from like Thanksgiving through Christmas and then the new year. And so, there's a lot of opportunity for different parts of the settlement process to land in these windows and then get deferred out, right? And so I was wondering if we could find not only historical evidence of that occurring, but, historical evidence that fit within the framework of FINRA's regulations. And basically, the way the trade would break down is that, you have your APs and then they return cash to the ETFs. And then the ETFs rebalance and spend the cash buying equity in the markets, right? So the ETFs go out into the markets and they buy the equity. Now, this appears very simple and straightforward. It's because for the most part it is, except this is actually three separate transactions, right? The AP is settling cash with an intermediary, and then you have a rebalance period that's a separate transaction where the ETF then deploys its capital in the markets, right? Um, and I still contend that AP's cash settled on November 18th. This is when we saw XRT removed from Reg Show. The fails, ceased. Some of the ETFs rebalanced in this period, which gave GME a little bit of liquidity. It wasn't a lot. It was only like 2.27 million shares sold, but a little bit up into the December 16th expiration, right? And then since December 16th, we've seen APs, well, let's say short volatility funds, uh, move their positioning from synthetic short to long volatility, right? Now, these positions profit on volatility to the downside as well, which we have seen some of. And what's interesting about that is that, they're shorting generally very hard every day. They're causing large fluctuations in price on the intraday, but they're not building up any new liquidity. They're basically just recycling the same liquidity every day, but instead of using it to churn volatility down like we see pre-OPEX runs, we're seeing them use it to churn volatility up, right? And so we're seeing hard shorts into the beginning of the day that are covered into the end of the day or covered into closing settlement. Now, yesterday we saw the shorts that they deployed in the early part of the day covered intraday. This doesn't happen every time, but it does when we see the rise into close, it does. The rest of the time, we're seeing those shorts covered at the closing auction, which means that the purchasing from those short covering, from the short covering, is being internalized. And we're getting those really big prints of like, 1.5, 1.6 million shares at market close. You guys saw these over the last couple of weeks. And we can see that in the liquidity data, right? And if you look here at GME, give me 1 second. Go out to the 4, well, no, like down to the 2 hour. And I pull this down to the 2 hour. Careful with SPX, it looks like it might be starting to fail. And you look at this period of time from, where they got that liquidity back going into. So here's the return of liquidity from the ETF sales, right? We see some liquidity returned up into the December 12th period right here. And then we see liquidity start to dry up again, right? But what we're really seeing is we're seeing the same overall. The trend is, less liquid, but we're seeing the same liquidity traded every day back and forth. And the net effect is it driving the price down, right? Because we don't have as much buy pressure as we have short pressure. The market makers got a negative gamma hedge. So they're hedging down into, all of the downside movements without hedging the upside movement. But if you look here, you can see liquidity generated in the pre-market, which is that immediately used to short, right? And then if the covering begins during market hours, we see the price go up into the end of the day. Something we saw earlier in the day yesterday, right? But not all days have that same effect. If we go back a little further, we have, some days like this where, the covering doesn't really begin until we hit after market hours, right? And that's where we're getting those big end of day block orders. So, keeping all of that in mind, I was trying to find some historical evidence of, GME's previous deferrals. Now, in 2021, we didn't really have any holiday deferrals around the OPEX periods, right? And there's a big shift there between 2021 and 2022. In 2022, we start to see some things we didn't really see in 2021, right? We see our OPEX periods offset and less reliable. And we also see rising cost to borrow into two of our OPEX periods, but interestingly, not the August one. We actually see cost to borrow drop after August. And so, I was trying to look for causes. And if you look at the OPEX periods for 2022, we have a lot of holidays that fall in the OPEX settlement period that we didn't have the previous year because, the dates shift. And we also didn't have rising cost to borrow in 2021, right? Cost to borrow rose with the Jan 2021 sneeze or squeeze or whatever you want to call it. And then after that, cost to borrow on GME went down like to 1%, sub 1% for basically the rest of the year, all the way into March of 2022. Now, the only reason for them to ever go to the lending pool would be desperation. It presents no advantage over shorting through purely ETFs. ETFs have infinite liquidity. ETFs have very easily resolvable FTDs. You can open up multiple CNS pipelines. And most importantly, when you short through ETFs, there's no recall risk. There is no long counterparty that's going to sell off their shares and recall your short position, right? Yeah, I know. I see upstarts going up. And what's kind of important about that is, this year they've had to turn to the lending pool, and the question is why. If this is such a well developed and thought out system, the only reason for them, I think, to turn to the lending pool is because, their trades haven't settled with the ETFs, right? And they're stuck in a deferral the same as us, right? We see them positioning alongside us for long volatility. But that extra delay, that extra month or so that the deferral causes, leaves them without a secondary market for liquidity, and that forces them into the lending pool, which then raises the cost to borrow on GameStop, as we're seeing now, as we saw in May and March as well. So I wanted to go back and look at you know, a time period where we did have a lot of holidays during the deferral process. And so I went back to 2020, which was the last time, you know, we might have experienced some of these same deferrals. And if you look here, well, let me go back to 2020 first. This is, give me 1 second, because I'm gonna have to, we're in different ETFs back then, so I gotta change some things. Ooh, Upstart's flying off the screen. Cool. Most of this I think is just us moving up with the rising market, so relax, this doesn't look like covering. I'm gonna go back here, and then I need to switch this to IWM. Thank you, someone. I will read that in a second. I assume that it's been redacted. Okay, so let's take a look back at this period of deferrals in January, right? And what's interesting is if can I pull up the, hold on, I think I can. If we look at the deferrals from December 25, 2020, the Christmas ones. Oh, gross. Okay, there we go. You can see that December 21st was delayed to January 13th. Now, we've always thought that this first initial spike on GameStop that led into January OPEX was due to reg show, right? Due to the large amount of failures occurring on GME at the time and its high fail to volume ratio. But I think maybe what we saw, and this is kind of a experimental take, but a fresh way to look at it, maybe. We maybe saw November and December OPEXs deferred out into the same covering period as January OPEX, giving us kind of like a bigger OPEX, like a compounded one. And as you see on January 13th per FINRA 4210, we run, right? We have a significant amount of price improvement that then leads to, you know, further price improvement over the coming days into, you know, the events of January 21st through 27th. But what's really important is if you look here at the liquidity on GameStop, and I think this might be an effect of the deferral process, we start to see GameStop go from illiquid, and we see it begin to return to mean, and then we see it become even more illiquid again. And then here on, you know, December 13th, we see it begin to run. And from December 13th through the end of the sneeze, GME's price action continues upwards. Now, if I go and look at the current period of deferrals, well, let me switch this to IJH, which is now our largest ETF. And I go out here. Okay. You can see that we moved from, you know, very illiquid. We're much more illiquid now than we were back then. Some liquidity is resolved, and then we're moving back to an illiquid state once again. The other compelling part of this is it lines up perfectly with the deferral periods from Thanksgiving I don't know if you, I hope you guys can see that. Let me try to make this a little bigger. This lines up perfectly with the deferral periods from Thanksgiving and then Christmas. If you look at this, November 18th is deferred to December 12th. That's the first crossover. And then December 20th, right here, oh, that's the 21st, sorry, is deferred to January 12th. Now, this isn't a double stamping, right, as Popcorn Trader so eloquently put it earlier. These are two separate trades. So you have a November 18th settlement of the AP, and then you have an ETF rebalance. So that settles out on the 12th, right? The ETFs, get their money, or they have their cash in escrow in order to buy back into their NAV. But the ETFs don't have to rebalance until the week after OPEX during their dividend period and the S&P rebalance, right? But the ETFs get a deferral here. And so this is actually a separate trade, which is now potentially deferred to January 12th. Which would be, like right here. And so we're trying to corroborate the cost to borrow to see if, these deferred OPEXs inherently lead to a rise in cost to borrow. But I would say that right now, the volatility, volume, and liquidity all support this theory. And then as far as the DFV thing goes, DFV was an employee at Mass Mutual back in 2020, obviously before he quit his job once becoming a multimillionaire. But DFV was in a unique position to have access to the Rex deferral system. And so I thought, what would be really interesting is after noticing this, I wonder if DFV made any kind of indication at the time about the deferral process from December OPEX to early January. And in a stroke of pure tinfoil and imagination, I found that on January 13th, which it would have been the settlement day for FINRA's deferral in 2020, DFV retweeted the same tweet that his own tweet from the December OPEX T+2 period, which is really fucking compelling. He would have had access to the Rex codes, and he would have seen the deferral potentially in the system. So maybe not a time traveler, but maybe a slightly more informed investor. That's about it. That's what I got for you guys. How it's gonna play out, time will tell. Is this MOASS? No. But it might be a bunch of OPEXs all packed together. So what you're saying is squigs may have been earlier, but they're not wrong yet. I don't think they're wrong yet, Dork. No, not full port weeklies. Thanks, Esrol. Thank you, Adopted by Dans. They can't tell if our thumbs are toes. It's really just emergencies exit. I mean, he had a horrific childhood accident where his thumb was obviously replaced with the tip of an older man's penis. Let's not make too much fun of him for it. No Greeks today. Yeah, they shut down our fucking API again. I have yesterday's. You can have them if you want them. Here. My biggest concern with that comparison is at the same time back then, GME was up a huge amount already. Yeah, and Cohen also affected a massive buy-in that had almost no effect on price for over a month. There's only one way to pull that off, right? So they would have had to have satisfied Cohen's buy-in with ETF liquidity at the time, which would make sense why we didn't really see an effect of it until almost a month later, right? I would just get as much theta as makes you feel comfortable, honestly. No, not the OPEC settlement period. Actually, January 12th. Uh, January 12th would be the deferral date. Well, January 12th to 18th, which is actually before the January OPEX period. Now, January OPEX OI is obviously stacked on the chain, and that can lead to a significant amount of hedging going into the OPEX period. But I'm not actually looking at the OPEX period for the deferrals or the resolution of the deferrals. You're pretty good at what you do. Thanks for sharing and educating. Thanks, man. I appreciate it. Interesting. SPX breaking 3850 today. If it moves to the top of the collar, it could. Yeah. Right now, it's still stuck. Let me check the OI update because I was running my mouth. Yeah, collar's still very much there. Well, at least as of 9:48 a.m. It's 12 minutes ago. I just dropped a chunk of change on some Gen 2425C. Let's get this fucking bread. You could have diversified your strikes a little bit, but I like it. I like where your head's at. This is the most compelling thing I've heard you say since you said to add ranch to my hot dogs. I never told you to put ranch on your hot dogs. That wasn't me. You're not looking at the OPEX period of the resolution? Then when? Between the 12th and 18th is the deferral period for FINRA. So I'm looking between the 12th and the 18th. Thanks for your research. Here's some money in case you break your bed again in the name of love. Thank you, Dave's Bullish Baconator. I'll send you a video if I do. Did you ask DFU what he meant by his tweet? I could try. You think he'll answer? Did you compare your new thesis to Upstart? I mean, very similar positioning, right? So If there's deferrals being used on one, there's probably deferrals being used on the other. They're both being like having the shit shorted out of them right now. I guess the biggest difference would be that Upstart's literally out of liquidity. IWR is tapped. Bots is really fucking illiquid, and Upstart's, I think, the most illiquid it's ever been. Ranch is fucking disgusting. December 22nd, 20% price increase that day, 30 million volume. January 13th, 50% price increase that day, 144 million volume. Okay. So I can see what DFE would have tweeted on those days. It has nothing to do with deferments or Rex kids. But why did he retweet the tweet he tweeted on that day? I agree. The tie with DFE is loose, but it's interesting. He would have had that information, or at least access to that information. And yeah, the price running on the days that FINRA's deferral schedule would indicate is more bullish, right, than anything fucking DFE could have tweeted. Any major economic data around that time? Not that was aware of, no. At least, I mean, I don't remember any major economic data around that time. You could look it up, but I don't think so. I will say I wasn't paying a lot of attention to macro environment at the time. I was more focused on my account moving up very rapidly. What expiries are you targeting? I've been selling like Jan 2023s for cash, and I'm selling 2024s for synthetic longs. So we should see cost to borrow rates plateau and continue to rise between now and the resolution period. Yeah, I think we would see them possibly plateau, maybe even drop off a tiny bit, but remain elevated. And then as we approach the settlement period, we'd see them start to rise again. In 2020, didn't Jimmy peak till the end of January? Yeah, I mean, it went through a standard OPEX run. So it ran up into well, it started running on the 13th though, which is kind of interesting because that really has nothing to do with the OPEX period. But then it ran through OPEX and then T+2 and T+2 and then smashed through Gamma Max and everything failed. They also cut off buying, so people couldn't raise Gamma Max anymore. Yeah, I don't really think this is going to apply to Rebecca. Not with the OTC. OTC has different deferment schedules and stuff, so I'm not really sure how those work. What college courses teach FINRA deferrals? I'm assuming several years of experience doing compliance at a hedge fund and a law degree. So potential OPEX run March too far out or Feb too much theta decay if an OPEX. Thanks. Yeah, that's a good way to look at it. So what you're saying is it's not gay if you both white. Yeah. What's up, Kendra? I No, feel free to play devil's advocate. I appreciate it. Obviously, I just came up with this last night. Any thoughts on the stock market being closed on Jan 17? Do you think that has an effect on deferral settlement? So it shouldn't, once deferred, done. Like you can't double stamp, triple stamp, a double stamp thing kind of is still in effect there, right? If it was already deferred from December, it would be deferred yet again. Now, the January OPEX period does not have any deferral dates. Unlike the previous two, there is no deferral for so FINRA 2023. Hold on, I'll give you the dates here. They just released this one, so holiday margin extension schedule. All right, so for Martin Luther King Day, the trade dates for or deficiency dates are Jan 10, 11, 12, and 13. So while any new trades that would occur during that period would be deferred, but any trades deferred to that period would still clear on the standard schedule. There is not any deferral for January OPEX at all. Not for the settlement date, not for the expiration date, nor the following settlement period. And it also line up with the timing we're seeing, and we're seeing all this pressure, but we're not seeing the run, and that would it fits. I don't think I'm trying to make it fit. I think it just does. I think we've done it. That made so much sense. Well done, dude. Thanks, Dork. Any thoughts on the stock market being closed Jan 2nd, 2023, in observance of New Year's? I mean, it's closed. Did Fidelity tell you? Guys, just so everyone knows, and I don't want anyone to miss this. All major US stock markets will be closed December 25th, 2022 for the Christmas holiday. I feel for you. I've gotten the notification like 6 times too. Oh, I have censored Ko-Fi's. Hold on. Nope, I don't. Thank you so much, someone. Anonymous person. I appreciate it. Not gonna lie, the last thing I read before I passed out last night was your DFE stuff. I thought it was a dream till I woke up and saw it again. Thanks for all you do here. Here's to another month. Thanks, C-Mill. I appreciate it, man. How does someone get access to the Rex deferral dates? Get a job at a hedge fund where you have access codes, or a broker dealer where you have access codes, and hope the codes that you want access to are in one of your clients' accounts or filed by one of your clients. But the expanded inclusion of GME is in nonsense ETFs to exploit ETF mechanics. GME has more ETF liquidity than it did in 2021, but it doesn't make even something semi-similar mechanically impossible. I mean, GME is more liquid, has more synthetic liquidity now. We're not going to see a repeat of Jan 2021. I don't think that's possible at all. But it could mean a significant improvement in price, or like something more similar to March. Maybe not as big as March, but close. Under this theory, March would have also been, a like double deferred OPEX, and that would explain why March was so much larger than any of the OPEXs that occurred in 2021. From a liquidity standpoint, March was the largest liquidity event outside of January 2021. And if that's true, and both of them were double deferred OPEXs, and maybe I shouldn't use double deferred, as that's kind of a misnomer, but twice deferred settlement, then that would be very compelling for whatever run is going to come up in our future, right? It would also explain, a lot of the issues we've had with timing, and hopefully help us narrow down the exact Rex codes being used, because they're very specific delay periods, and that would give us, better insight into future OPEXs, especially ones that are deferred. Yeah, it could apply to Upstart too, because I mean the same ETF, brazen ETF liquidity usage, right? Upstart could run sooner. I may not have as much of a delay. There's different possibilities. They're not the same, but they are similar, and they are both, short volatility positions. So there is going to be some correlation. I don't know how tight it's going to be. I think it could be bigger because of potentially overlapping deferrals. So, it could be that, ETFs now not only have deposits from APs for November, but they also have them for December. And we're moving into January, right? And so you get the compounded effect of these, right, which can lead to, a large run. Plus, you have the large amount of options OI present on the chain for the January 20th expiration, right? And so a significant improvement in price during that time period before the OPEX expiration would drive lots of these contracts in the money, which then, creates that feedback loop of gamma hedging that everyone loves so much. Yeah, I clipped the whole big fucking thing. Wait, so if you're right, would Jen be twice or triple deferred? Twice? There would be November and December settlement occurring going into the Jan OPEX. So after today's discovery on Jimmy, is it changing any of your positioning, where you said earlier that you only want to play CCs from now on? Which month is a good safe wait and see type positioning? Also, is SPX gonna finally rally up to 39.50? It might. We're pushing up through the collar right now. Maybe a little less fear of the collar pulling down from the bulls, given that it rolls out tomorrow. Not bad, but hold on, what was the first part of the question? I got kind of caught up thinking about the collar there for a second. What would be the best way? I mean, obviously I would like a lot of theta. Some of these contracts are kind of dead already. I really don't know what I'm going to do with them. I might move them out a little bit. I'll probably fucking close some of these shitty weeklies. But I have like another day on those. If we get like a little pop in price, I might be able to close them at a little better price. Especially if the market's gonna move up, or we're gonna get some like market volatility, because that could help us drive prices higher, right? Why do you keep mispronouncing Challer? Are you trolling? No, it's a collar. It's not a Challer. How would you hedge SPX intraday on this test of 38.50? Like 38.35, 2 to 5 DTE. I'd probably hedge above 38.35. So, obviously this resistance has been fairly significant over the last couple days here between 38.43 and 38.46. I would probably, let me think how I would do this. I would probably cut. Actually, I wouldn't. I'd probably maybe like 38.40s, but I'd wait for the test to maybe break out. I'd want to be above this gap to hedge the downside. So maybe here I would pick up like 38.40s, actually. I'm gonna cut my straddle here. Hold on, let me look at the OI real quick. I know it's a bit of a time crunch. So 38.50 is a little negative. But are we going to get rejected sooner, or are we going to be able to continue pushing up? Futures still look pretty strong. Although I would say a turnaround is likely soon. SPX looks pretty bullish on the 1 minute. So, yeah, I think maybe we push up to like 38.46, 38. We might test 38.50. At which point, yeah, I would probably get like 38.45 or 38.40 puts. Maybe like 2 DT. Probably not. I probably wouldn't go too crazy with them. The flip point is at 38.47.50. So that's probably where we'd see a rejection. I don't know. So if they're trying to, this is something that I probably should have said about them raising volatility by churning short volume. Yeah, but I discussed how we're seeing them churn short volume on GME, right? But in doing so, they're raising IV, so IV is going up. This may be in an effort to sustain their long vol positions that they're currently in, right? So those positions require the IV go up. And as we know, they're dated for the same period as our long positions, right? And so in order to sustain those positions, I think that's why we're seeing them recycle the short volume and drive implied volatility higher by shorting and covering and creating a lot of HV intraday, right? And by driving implied volatility up, they stabilize their losses on those positions until we see a run, right? So it may be that we see IV continue to slowly creep up into that deferral period. Actually, I was DFV never really broke any rules, right? Even if he knew, that's not necessarily breaking a rule. As long as he didn't tell anyone directly. And it's still his employer's responsibility. To maintain the privacy of their clients, right? Maybe no one knew he had access to the codes. He was in education, right? Maybe he wasn't supposed to. Maybe he overheard it. Who the fuck knows? I posted the whole thing in the Discord and the announcements. This is why Mass Mutual was fined millions. Possibly. Selling CCs lowers IV, doesn't it? That would be a difference to 2020. Who's selling CCs? Oh, you mean just like retail investors selling covered calls? Sure. Yeah, the other interesting thing is in the lead up to the January run, we started to see a lot of sold in the money sold puts on GameStop. Um and I think yesterday we had 6,000 OI at the 1875 strike, which is quite a lot. Sold. Uh which could be indicative of similar positioning. It may not be, but it does appear similar. Although we do see sold puts like that going into most OPEC's covering. Can you compare historical data from other heavily shorted companies' work to test your thesis? Like Blockbuster, Toys R Us, Sears, Revlon, those are all bankrupt. You can't there'd be no way to compare it at this point. Is your SPX positioning changed over the last couple of days to the drop a potential further leg down? No. Are you still keeping a lot of calls or still starting to cut calls? Hold on. Still trying to cut calls during these bounces like we have today and adding more puts. I haven't really positioned very heavily for the downside. I have some short positioning around like 3,800 and 3,750. Um and 3,835 today because of the straddle, but no, most of my positioning on SPX right now is the straddle. I have some calls at 3,870 that expire next week. That's about all I have for the long side. I wouldn't say I'm really heavily positioned either way. I have some, pretty far out of the money like March calls at like 3,200. Let me see. I have 3,800 and 3,750 for January expiration. Um that's it. So yeah, not a lot. And the January ones I'll probably end up rolling out if we continue up into the end of the week. The collar is going to move up, right? And that's going to free up a lot of our ability to move to the upside, at least 500 BPS. One second. Yeah, I think the so those puts from the peak there, I would probably hold on to. I think this will maybe drop a little more. It's hard to say, but it looks like it could. Yeah. I think futures are going to see a rejection at 38.68, so we'll probably see a pullback, maybe back to the collar, maybe a little lower. So in other words, the whole thing about DFE knowing Rex codes didn't come up at the Feb hearings because it would have just been better for everybody not to have them discussed. I mean, it may not even be that they knew, right? It's not like their fucking research into the events surrounding January were very flushed out going into that hearing. Like, nobody knew what the fuck they were talking about. They were just asking bullshit questions about whatever platform on options trading their party takes and how retail should or should not be allowed to have access to it. That entire fucking hearing was just bullshit, right? It was just a sham. It didn't mean anything. Kenny just trying to read his lawyer's flashcards. Sorry. Every Capitol hearing is basic stuff discussed. Nothing is brought to light in this. Yeah. I think the only thing that that hearing really revealed in any with any degree of certainty was how absolutely fucking inept the House Financial Services Committee is and how little they actually know about the financial services that they oversee. I don't think there was a single person there who knew what the fuck they were talking about, except maybe DFE. And then, the three guys who didn't say anything. Be sure to say that when you get called to testify in Congress after MOASS 2.0. Dork, don't say things like MOASS. We're better than that, right? Let me be perfectly clear. There was no crime. Probably not. These hedge funds pay massive legal teams, bribe politicians, and push through agendas to ensure that they're never committing crime. Their goal is as institutions is to reduce risk, right? And crime is a big risk. You don't Crime is bad. No one wants crime. Now, you want to do everything possible within the confines of the law, but you don't want to break the law. Breaking the law is losses and lower returns. No, breaking regulations and paying fines is a totally different matter. That's not breaking the law. That's not like, a federal crime. That's just, I fucked up. Whoops. I think people are misconstruing, SRO rules, which are broken, versus, actual criminal code. Those are not the same thing. Bribes are crime? Tell that to super PACs. I just realized this is a picture of you and not Ralph Macchio. That's correct. I'm not shilling for Wall Street. It's just a fact. There's a compliance desk on every floor for a fucking reason. On my Fubo leaps, what do? Emotionally sell my 2-year hold for 10% gains? Fine, I'll do it. Do you expect them to short it hard as fuck prior to Jan 12, 13-ish? Did they last time? No. Actually, price stayed pretty stable. IV continued to rise, which is kind of what I expect to see, actually. They're kind of out of liquidity, right? Like they've only got the same fucking few 100,000 shares that they're shorting every day. And they short them and then they cover them, and then they short them and then they cover them again. If they need more, the borrow rate goes up, so that's dangerous. So is now the best time to dive into calls with plenty of theta, or next week? I would say if Ivy is going to continue to rise, you know, can you not figure that one out on your own? Sippy cup? Why don't you get a job at a hedge fund? Why would I want to do that again? What's your favorite and least favorite thing about working at BlackRock? When GME Squeeze 2.0 happens and Congress calls you in, how do you explain to Congress that you in fact do not like pickles? I don't know, I'll figure it out. Most of my trades wouldn't be permitted if I worked at a fund, especially not my own accounts. F30 December 382 call on SPY. Can I exercise the amount of 100 SPY shares? Would be way more than the call is worth right now. Yeah, absolutely. I'll just start by saying I sell calls on Craigslist. I think I speak for everyone in the chat when I say we all want you to use your A+ sleuth-like skills and all your time dedicated to the MMTLP cause rather than GME. Thanks in advance from all of us. I dedicated 15 minutes of my life to figuring out the situation on MMTLP. You guys all bought a stock that was going private. It short squeezed. People didn't sell, and they got delisted. Now you have equity in Next Bridge. Or you don't? I don't really know what happened after that. Now, Mr. Gorick, can you please explain to the committee what a cornichon is and how you use them to manipulate the market? That's a question for Bithead. GME up 3.04%. My Feb 2023 20C up 2.59%. Sad panda. You'll be okay. Thanks, Sippy. Where can I buy this next bag? I would like to own it. Man, I don't think even the people that do own it want it. You pack them into Cornichon derivative swaps and sell them to Bithead. Yes. Running low on powder. Would March be enough theta to watch it play out? Thinking of starting with some out of the monies, 50, 60, rolling out if nothing by Jan OPEX. Thoughts? That doesn't seem terrible. Finder's being sued over the MMTLP situation. Yeah, they won't win. So you're saying I should stop going all in on Fubo and diversify? No, that'd be crime. I don't care what you do, Carl. Why would you buy Bobby? Gross. I don't know. I just said that they're probably going to drive volatility up over the next several trading days due to their attempt to control price action. It's not having the effect they want. If calls are way down 90%, but end up in the money at the last minute, they'll be worth the intrinsic value, but you lose everything you paid in extra theta, correct? Yes, correct. They would still have intrinsic value. President of Ukraine has announced a partnership with BlackRock to rebuild Ukraine. Gherk, are you flying out to Ukraine? No. You ever roll your dead upstart calls? No, I haven't. They're still there. They're still dead. Well, that's the problem with pink sheets, right? Is that, the exchange is just all the broker dealers versus an actual exchange. And so, even though trading should have been shut down, it wasn't in time. But good luck fucking suing them for that. Now that we know all there is to know about the stock market, it goes from left to right. Are you going to pivot the stream to educate us on how to be immensely, ruggedly handsome? Maybe. I know you'd never full port, but if Jimmy went on Reg Show, would you go balls deep again, or just CC the run? I'd probably go balls deep. Ben Carl, free dork, re. Okay. Looks like you're both free right now. Leave dork alone, Carl. Stop getting jealous. Ah, you bitch. Is after Jan 12 and T plus 2 the more likely timeline for resolving the deferred covering? Just wondering if rolling Jan 20 calls is prudent if Jan OPEX more likely to start covering. You probably want more theta on them. They're just going to burn up otherwise, right? and be worthless. I should probably get rid of these. Spies over the collar. Why can nobody remember where the collar is? It's at 38.35. Is 113 contracts enough theta? No. Thanks, Dan Weeklies. Yeah, guys, all U.S. stock markets will be closed Monday, January 2nd, 2023 for the New Year's holiday. There's not necessarily anyone on the other side of the collar. No, I mean, market makers have to hedge against or with it because it's so large. Gen 24s on either Upstart or GME seem so conservative. Okay. I have the funds to go about it that way, but wouldn't April or June's be a better setup? Sure, I mean, as long as you're willing to roll and stuff. I'll probably pick up some, like, March contracts. Dude, Gurk, dumb question here. What if ETF rebalance has a much different outcome than when in a bull market? The ETF port is much smaller after this bear market? Or is thinking in dollars wrong? I think thinking in dollars is wrong. Also, we already know the effect of, ETF rebalances in a bear market. We've had several this year. Looks like SPX is gonna grind up all day, or just continue to get rejected off of the gamma flip point and then fail back down to the collar. I don't know. I have puts at 38.40 right now, so and stops on the top part of my collar. So if it moves up, I'll close the puts. If it moves down or continues to get rejected off the gamma flip point, then I'll close my puts. Or close my calls and leave my puts open. I know we're close to a big run. People start having meltdowns in GME chat. It's been the missing piece all along. Who's having the meltdown? No, SPX not going to 5,000 today. Will Fed monthly XRE be enough data for a potential Jan run? Or should we be looking to go to March? I mean, Feb is the standard OPEC's positioning. It gives you enough time to get out, but if you don't get out immediately, then the contracts will burn up. Port shot is nothing but meltdowns. Yeah, but why go in there? We don't break the collar by end of day. Can you sing a few lyrics of Stuck in the Middle with You? Clowns to the left of me, jerkers to the right. I know the song. If you want to ask me if you can take more risk by buying shorter dated calls, yes, you can. But given the unreliability of timing as of late, is that wise? What impact would Upstart's potential buyback during this period of delayed deferral have? It would move the price up. Are you rolling your Jan GME calls or keeping them since they're dead anyway? I don't know. I might just keep them because they're dead anyway. To be real, lots of people here shouldn't even be buying calls. Just stick to covered calls and shares if you don't know what to buy. Probably. In which phase of Wyckoff theory is Jamie in right now? If we return to... So if we can return to 24, then I would say we were moving into phase C. Yeah, I think if we return to 24, then we would be moving, well, from phase C into phase D. We would confirm phase C. For anyone on the fence about rolling contracts out, you may want to consider the tax loss you can take by rolling before end of year. Oh yeah, that's true. Oh god, is Mike back? Man, the cheese has just slid right off your cracker, dude. When we roll your upstart 40s down to 22.50 if they're only $6 per contract versus $3 for 40s. Have 40s. roll 40s down to 2250. I guess I could. Those are for 2024. Hey, sweet cheeks. I got stopped out of most of my 3815 calls a few minutes ago. Fly to the EU tomorrow for meetings and a small vacation. Still will be trading. Can you speak on how price action might behave during the roll? I got very excited when you said 500 BPS upside. But they'll move the top of the collar up 500 BPS. Like they move the top of the collar up 5%, and then the put spread is 20% below the current price. But we don't know. They rolled it twice on the following volatility last time, so we don't know where it's gonna land necessarily, but it should land above the current price, and it'll open up some room to the upside. Did you sell your GME calls? Not yet, no. Some of them. Really don't need those. Hmm. Hmm. This actually might be okay. Um. I don't know yet. I'll probably get a mix. Of expirations. For those who fight the urge to hold out for giant gains with plays, $400 a day trading in 2023 is a spare 100K in your life pre-taxes. Yeah. Yeah. I mean, they hedge the upside of the collar, so I mean they don't really care. What is our equivalent to Jan 13 for 2023? Jan 12th. I've already started positioning in Upstart 2024 calls. I've been selling I'm going synthetic long because I still don't want to pay for calls on Upstart, but I've been selling well, I was selling the 1250, but now I'll be selling the 15 and maybe 1750 puts for Jan 2024, and then using that to buy uh 15 and $17 calls. There's a significant amount of skew there, so You get like 2-to-1 or 3-to-1 leverage per sold put. And then if you go further out of the money with the calls, like 30, you can get, 8-to-1, 10-to-1 leverage. Hmm. Are triple bottoms same like double bottoms? What happens to the third top if it's still looking for its own bottom? What? Ah, Fluffy. Sorry, the math made me do it. Alright. The hedgies have lost control of GMA. We're moassing to $18. We're already at 1840. How long can I sit on this bidet before it doesn't count as washing? What? Buy whatever contracts you want, man. Okay, just so you guys know, you're not supposed to spray the bidet inside you. Don't use your bidets to stimulate your prostates, you sick fucks. It's not an enema machine. Oh, Jesus Christ. You guys are so fucking weird sometimes. Guys, I'm a urologist, and if you can stimulate your prostate with the bidet, go for it. Don't listen to him. I put my goop in my bidet. Thanks, Gwyneth. Being healthy has never been easier. That's why we can't have nice things. My water pressure is so good, I charge visitors for colonoscopies. Nice. Inside acquired 85 million shares per filing yesterday at 10.36 a share. 30% shorted, high float. Thoughts? Hmm. I'd be careful with insider acquisitions on Chinese companies. Aylin, would you stop talking out of your ass? Of course you didn't set 1-year candles on GME. Spouse doesn't understand what I listen to every AM and just caught the whole prostate combo. Doesn't look impressed. Does your spouse have a prostate? Isn't Lucid based in China? Or is it just their manufacturing? Hmm. Yeah, I thought originally they were a Tivia or a Tiva, and they made batteries for electric buses in China. Hmm. I'll have to look more into it. I know like 60% of the company is owned by the Saudis. Like their public investment fund. The founders were like former like engineers or project managers for Tesla. I don't know. This rejection off of the gamma flip point seems pretty strong. My calls got stopped out on it, so debating entries around CPI timeframes and SLD for GME longs. Uh, SLD might be too late. If I'm right about the deferrals. Hmm. The founders were named John and Dave or some shit, so clearly they're suspect. Yeah, I'm pretty sure that the founders are like Chinese like Americans. Um but I think that the original the reason there's confusion, at least for me, is I think the original business was formed in China, and then like that became like CCIV, which then de-SPACed and became Lucid, right? Or am I thinking of something else? I mean, you know, all of those like second tier EV manufacturers probably have some potential. They all have backers. Who's gonna win? Who knows, right? You got Rivian with Amazon backing it. You've got Lucid with the Saudis backing it, and you've got Polestar with fucking who is it? Oh, there's Fisker too. Fisker's an interesting one. Yeah, I owned a bunch of Lucid last year. Sold tons of covered calls on it, but I ended up getting called away on my shares. Hey Pickleman, I heard you talk to DFE. Confirmed MOASS for January. I didn't talk to fucking DFE. Should I make sure my pacemaker batteries are good? I mean, always. Yeah. I don't know how do you charge them? Do you just stand in front of a open microwave? Yeah, but Polestar, it's Volvo, but they have like a big backer. I can't remember who it was. Do I get anything for turning you into a super strong tweet decoder? I'm not decoding any tweets. It's just interesting. That's all. The data is far more compelling than the DFV tweet. Oh, you're right. The company's CEO, Peter Rawlinson, was an engineer for Tesla, specialized in battery efficiency. They have a manufacturing plant in both Arizona and China. The Saudis fund them. Okay. I would just find out like which. I, I want to know where the like where did it IPO? Are the shares like the shareholding for the company IPO'd in the U.S. market or on like Hang Seng? Did they get called when the price hit 45 for Lucid? Fuck, I could look. I think they have them in Schwab here. They got called away on Friday, January 7th at $40 a share. I haven't been back in it since. Those Greeks look old. They're yesterday's. I should probably make a note of that somewhere. Our API went down last night, so we're not getting data again. Thoughts on filling the SPX gap to 3780? That'd be really cool. I don't know if that's gonna happen. There's still a big fat collar. Maybe we might get a push up here. I like the range we're recovering in. I just don't know if it's gonna have any momentum. The problem right now with the collar is it kills momentum. What is a collar? It's sold calls and then a put spread. So it's like moderately bullish, but protects you from large downside moves. I covered it earlier in the stream and clipped it, Cole. I'll put a video out later today about it. Like I'll put the clip out later today. I gotta edit it down though. The application you're using to consume the API isn't down. Whatever, Paris. Alright. When will my 3840p print? Didn't it just? Yeah. We just tapped 3830, like 3838. How hard did you want it to print? Okay. This could get rejected again and continue to pull back. I'd be wary of shedding a downside hedge at this point, especially given our proximity to the collar. Well done, Girk. I knew you'd figure it out eventually. Thanks, Roaring Kitty. I didn't ban Darth Dan, but I didn't marry him, so you know, we got that going. It's kind of like a fish taco, but the fish is the taco, and you put everything inside the fish and eat it like that. What is? I'm just gonna assume Marin Kitty's the real deal because that's more entertaining at this point. Yeah. I mean, you can ask him about Brockton, and he seems to be very well educated on the subject. I have no idea if DFE is positioning in Jamie to capture another Jan run. And Reg Show at that time kind of just meant that they had a harder time controlling the price, right? Will DFE tweet a kitty before the 12th of January? I don't fucking know, man. But Gork is stonks? Yeah, they are. We already broke the collar. The gamma flip point's higher than the collar. The gamma flip point's at 38.47. The collar's at 38.35. Head and shoulders on SPX? Yeah, I'd be worried about a breakdown here. It's definitely possible. We might just keep consolidating in this range. Remember that it's harder for us to break down above the collar, right? Because it acts as its own little gamma flip point. So the market maker is like when you cross the collar, the market maker starts selling into falling prices or buying into falling prices and selling into rising prices. So it's harder to break away from the collar, but it's also harder to fall back through it. Once we fall back through it, or if we fall back through it, then price action will accelerate to the downside. Because then the market maker is going to be selling more into falling prices and buying into rising prices. So volatility picks up underneath the collar. And since the collar and the actual gamma flip point are so close now, you can kind of just look at this entire range from like 38.35 to 38.47 as just one big gamma flip point. It's very wide, right? If you're going to enter a share position for Jan OPEX, what price would you want to target? I mean, GameStop's pretty cheap right now. It was cheaper the other day when it hit like $17. That's usually a good time to buy when it's really cheap like that. How over the top bullish should you be if DFV retweeted his retweet on Jan 12th? And would you be more bullish because the deferrals are from FOMO caused by him tweeting? I'd probably be happier about the deferrals. No problem, beef. My port has fallen down the stairs and at one point was moving, but now shows no signs of life. What should I do? You can deposit more money into it. Roaring Kitty, what is the highway area where I-93, Route 3, and Route 37 colloquially known as? Are we doing this? Oh, okay. I see you're doing a thing, like a game show. When I turned on my work computer for the first time since Friday, I saw an old tab that had GME at over 20 and almost had a heart attack. Don't you die on me now, Fuberto? SPY up 1.5%, GME up 1.5%, SPY down 0.5%, GME down 10%. Yeah, that sounds about right. Seems like a solid buy. GME less than 20, sell greater than 20. If run repeat is needed to profit, use long dated calls to amplify. Yeah, it is. It's not a bad strategy. You don't get a lot of leverage, but over time it's pretty profitable. SPX back below the collar in a minute. Yeah, it's getting weaker. We don't accelerate below the collar. The collar is a magnet. No, you do actually. So the gamma on the collar flips when you move below it, and then the market maker sells more into falling prices. So, no. It doesn't fully flip the hedge. I mean, that market maker is already net negative gamma at 38.42, but less so than they would be under the collar. Below the collar it both attracts and repels at the same time. Volatility. Above the collar is syrup. Viscosity slows down the candles. Yeah. I'm not even wearing a collar. We'll put one on. I had a dream last night that I was ice skating on my driveway with the Asian guy from the Police Academy movie. What mean? Maybe you should salt your driveway? Will you please put a shirt with a collar on it? Anytime we're above the collar, you pop it. No, I'm not doing that. I don't want to wear a collared shirt at home. I got stopped out of my calls and then we bounce. I wouldn't feel so confident in this bounce just yet. Although I do like support on futures. Futures are looking kind of nice. Definitely holding the 38.68 level again, which has been difficult to cross over the last several days. They don't own any deep V-neck t-shirts. Put on a leather collar and say, "That's it, daddy," anytime we flip. Oh. So full port into 0 DTA 3835 puts? I don't know about that. I think unless this moves, we're probably going to be pretty fucking range bound. Yeah, but we're also net negative gamma. So all the color does is skew the overall gamma below the like actual gamma flip point, right? Sayuri? And don't forget that when we fall below the collar, JPM starts selling futures, and above the collar, they start buying them. So theoretically, the effect of the hedge should be mostly neutral, but we're still net. The market maker on SPX is still, or market makers are still net negative gamma. Theoretically, I'm a cowboy floating head. No, that's real. I've seen you IRL. Jan 6 3840p is what I picked up. All right. Well, we're about to test the fucking gamma flip point again here in a second. Regarding the DFV tweet, as a Matrix fan, the scene is when Morpheus says to Neo, "You are living in a dream world, Neo. This is the world as it is." Cue machine world scene. There's also a magic 8-ball in Morpheus' sunglasses, but I don't know what the fuck that means either. Well, yeah, they would have to hedge all the calls that are open for OPEX because they wouldn't be expired yet. Just ask Roaring Kitty, he's right here. He already said I was right. We've broken the gamma flip point on SPX. This would generally be the part where you ride your calls to the moon and shed the puts. I don't know how much range this actually has, but definitely a positive move. Let's see what this looks like to the upside. 3855 is a bit negative, hard to cross. Yeah. 3855 is a bit negative, but 3860, 3870, very positive. Ooh, I'm gonna be able to close my 3870 calls today. Maybe. We're gonna live yesterday's dream today. What do you think all those sold puts were about yesterday? 741, Jan 24, 25Ps were sold. There were others too. On GME? There was a lot of sold puts on GME yesterday. I mean, their credit, They could be like synthetic long positions. Divvy has a video where he uses a magic 8-ball in times of indecision, allegedly. I know that. This is also the point in the movie where Neo has seen 7 white rabbits, interacted with Trinity 4 times, and has been identified as the one. I see what you're doing there. Well, 3855 is like a bit negative, but not much. So I don't know if we can cross it or not. But I do have 3870s that I would love to see go in the money. They got raked over the coals a bit yesterday. They're back up. They're not break even, but they're close. Is Nvidia a basket vol short stock? Yes. Are you calculating the gamma neutral point on SPX of the monthly index options, the SPXW weeklies, or separate? The gamma flip point's calculated off the weeklies, I believe, and then our gamma neutral calculation is based off of the AM expiration, if I'm not mistaken. But the AM calculation you're going to use for like swing positions, longer term. How happy did you get last night after you looked at the deferrals and then saw DFE's tweet? I just thought it was really funny. This is what I'm hearing. The seasonality of the stock market is, in actuality, due to regulatory deadlines that can be predicted timed with enough studying of the underlying. That's not an inaccurate statement. I picked up some 3870 0DTE, working out so far. Oh, nice. I'd be careful with the 0 DTEs on those. I have them for I have a little bit more theta on mine. Jan 6th. Oh boy, a free one. I can't wait for this. I hope everyone has a fun New Year's Eve and stay safe. Thanks for all you do, Pi-Fi. Thanks, Nuns with Guns. I appreciate it. Frog Dongs, hey Girk, thanks for all you do. Could you go back through the RC tweets and decode them also? No. I don't know what the fuck RC's talking about half the time. SPX breakout, breaking down or consolidating? It should be harder for it to break down. Futures look good. Futures have broken up through 3868, and they look fairly strong. They may continue to move up, which would be bullish. SPX looks stable. I think consolidation in this range, we could fall back to 3846, but hopefully we hold just above the gamma flip point. If we can hold above the gamma flip point, we'll probably move higher after a period of consolidation. But I like how futures look. Futures look pretty good. So I think this can push up. I also think we kind of have decent positive gamma to the upside with a little bit of difficulty at 3855. I don't care what Linux says. I have a new bonsai project arriving today. The plant is called Sedum multiceps mini Joshua tree. Would look great in your apartment on your trading desk. No, it wouldn't. Do you think the market is to fully recover if the SPY breaks above 400 before we hit new lows? Or do you think the market in general is still overall bearish? I think near term, we have some bullish momentum and we have good macroeconomic data. I think once we start seeing year-over-year reporting from most of the S&P 500, we're going to start to see a significant decline um, in forward PE, and that's going to likely cause a large breakdown in price in the indexes. So I think we're seeing a slight macro improvement on the, at least on the inflation front, and the labor market with today's data is starting to look, a little less robust, which is nice. Not much, but a little bit less. So still a lot of work to do as far as the labor market's concerned, but the cooling inflation data is definitely not bearish. But deflation is bearish. And margins due to the rate increases are not going to be sustainable in their current form. So, eventually forward guidance is going to have to be pulled back. That's either going to happen through quarter 4 or quarter 1 earnings going into next year. And I think that's where we'll really start to see some serious downside to the indexes. That's, at least that's where I'm targeting for larger moves down. Didn't he buy Jan 6 calls, like $6,000 worth of them, that are now worthless? I just don't care. The fact that you waste your time paying attention is sad. Wow, RC playing 4D chess, not giving any forward guidance whatsoever. You know it. 3,900 possible on SPX by tomorrow if we hold these levels. In line with the hedge, or like the collar rolling off, maybe. I wouldn't say 3,900 is out of the question. But the collar can produce a lot of volatility. Like the collar moving can produce a lot of volatility. And it's not guaranteed to move us to the upside. Am I right in thinking that this plays out as you think? We might not run on the 12th, and this could extend out to the 18th. Yeah, that's why I said 12th through 18th. That was part of what I said. I just figured out the Lucid thing. The huge Saudi fund added 7.7% to their ownership on 12/22, roughly $1 billion transaction. Damn. If SPX bounces off the flip point again, that is when to drop a put hedge. I'm just trying to manage the put side of the strangle from last night. I don't know where you're strangled, but this morning when we were below significantly below, probably would have been a good time to close puts on like the straddle. I still have the long side of the straddle open, but not the short side. I rolled the short side up to 38.40, but if we start to break away from the gamma flip point, I'm going to close that too. Would ETFs going on reg show thresholding change the possible date at all? I don't think so. It hasn't. They haven't gone on threshold yet. It could defer settlement of one ETF, which would probably just be XRT. The collars, the sold calls are 5% above spot, and the sold put spread is 20% below spot, roughly adjusted for market conditions. They also have different collars. They have 3 hedged equity funds, I believe. The other ones aren't as big, but give us another one of those Cosm plays. That's not how that works. Are you buying SPX puts yet? I have some, but not many. I have 3840 for the short term. Those are probably going to get closed. I just rolled those up. I have 3800 and 3750. And they have 3200s for March. Most of my SPX puts I sold off a couple days ago. Like last Friday, last Thursday. Just got here from a hearing. Deferrals equal crime, and Jan calls may rise from the ashes as shoddy weeklies. Well, they'll be cheap as fuck to average down, Big Danionaire. I'm starting to feel like I should dump these 3840Ps at a 12% loss. If we break, like I said, if we break up from the gamma flip point, then yes. I'm probably going to close those at a small loss. It's not that bad. Worth it to have the hedge. They can't get much cheaper. Oh, yes, they can. Futures still look strong. SPX is looking a little stronger. I like how it looks. Yeah, I think this might break up. 38, remember 3855s could be tricky, but it may not be. The net negative gamma there is minimal. If we break 3855, I think we're gonna see like 3870. Close, at least close to it. No, I uploaded the charts with the tips today this morning. Did you suddenly think of DFE's tweet, or after a steady process that led you to Rex codes? I've known about Rex codes for a long time. I just looked. I was just curious. Because I was looking at the Rex codes and I was like, you know, who would have had access to these? DFE. And then I was like, I wonder what DFE tweeted on January 13th. So the DFE correlation came up after the fact. But it was fun, so I posted it. I regret it now because it sets off people like you, Alan. The earliest expiry contract I have is February. What have you done to me? Oh my god. Are you gonna start making money now, Popcorn Trader? Your wife's gonna leave you, man. And your goats. I'll start weekly CCs for next week on today's jump. least for next week. But you could if you want to. I'm not gonna, but you could if you want to. My wife's family owns the land the goats are on, so I hope not. I mean, if she thinks all of a sudden you're an independent woman, I don't see that lasting long. So you have Gen 6 calls on a stock that it's in the red. What criteria to look at to determine rolling those and what date? Are you following Linux's place? You always do this to yourself. This will be fun. Fast forward to 12 to 24 hours. I deeply regret this. I mostly regret saying anything ever, but DFV tinfoil is a level I didn't know we were stooping to. I just thought it was interesting. It has nothing to do with the supporting evidence or data. As your PR manager, I propose that we change the story about to you were talking to DFE and got brought up in casual conversation. Icon and RC were there too. We'll get more subs this way. I don't want them. I don't want those subs, right? No, I'm not a dreamer like you, Aelin. You son of a bitch. There's no fucking MOASS. All of your tinfoil hat conspiracy that you draw from Superstock is stupid and is going to lose you money in the long term. MOASS is FUD. It's the greatest FUD ever devised by this fucking community. This stock is mostly a piece of shit. And I only cover it because thousands of people are fucking underwater on it. And I hope that one day they will get above water. Don't get your signals crossed. Yeah, but people didn't want that to happen by Polar Bear. They decided to DRS their shares instead. $38.55 gonna break, headed to $38.70. Looks pretty fucking good. Yeah, because people searching MOASS need to know that it's bullshit. Why wouldn't I tag it with MOASS? It's still a topic of discussion. My shares aren't underwater, actually. Although, they're getting close. You guys should have known I was a shill when I didn't have a price target of $10 million in the exit DD I wrote 2 fucking years ago. Which many will now realize is just the proper way to exit a run in a stock you hold a position on. You notice how my exit DD didn't call for popular themes such as selling on the way down or holding my shares in an infinity pool. Now, is there a valid reason to think that DFE may have had information that wasn't available to other investors? Yes. That does not equal MOASS. Gurk Koala Hugger told me I gotta sell 1 share for 50 million on the backside of the short squeeze and keep the rest to prevent worldwide crime. How are you going to do that? You sold all your shares months ago, Popcorn Trader. Regarders Infinity Pool. Jesus Christ. What is it about the plethora of questions you answer repeatedly that have answers in the daily DD that makes you think people can read your older DD? Yeah, that's a really good point, Baradactyl. Sometimes I wonder if anyone's read the DD. I mean, some people are like, yeah, I read it, but did they? Don't you think GME is shorted into oblivion? No. I think GME is very synthetically short right now. I don't know if it's the entirety of the float, but it's a lot. Right now, GME's short interest is 21.29%. The upside is decent, 10 to 15% above Gamma Max. So like $32 ish. Gamma Max could theoretically double from its current point if there's some FOMO. So maybe we hit like 40, high 40s, 50-ish. Reading and comprehending are different. Stop associating them. But I explain everything so clearly. I've not read it. I only read gaffs and he's wrong. Wait, so you're telling me that one dude who owns 10 shares of GME, he has 40 now, won't be able to retire and become a multimillionaire after selling his 10 stock? Shocking. Yeah, believe it or not, that's not probably going to happen, ever. Even if it's squeezed, at most he'd be able to buy like a mid-sized sedan. And says that we halt all stonk talk until you say the word plethora again. Why? I treat your DD like white papers, reading over and over again, and then I get SparkNotes versions via YouTube. Nice. FOMO will be great because of the past of the stonk, even if it's banned on Wall Street bets. They'll return as soon as it pops. They're broke, man. We're in a fucking recession. People are losing their jobs. The ones that aren't are working like 3 jobs at McDonald's for slightly higher pay than they paid 2 years ago. Rents are up. Food costs are up. They don't have money to YOLO into zero DTEs. And their life savings gone in DRS. Your essays always lack a clear thesis and conclusion in the English major sense. I think you do it on purpose to avoid making decisive statements, to avoid liability, but most of us are not in finance. So you're saying the 0.00037 fraction of a share, I have a computer share, I will be able to sell for $370,000? Probably not. I don't like saying plethora. Maybe I do. I don't know how I say it now. You fucked up my natural rhythm of saying the word. Hello, I am the new and improved popcorn trader. I now have far dated reasonable options like June VXX ADCs, which have more volume than I expected. Payday loans, bro? Maybe. I guess Upstart can fund MOASS 2.0. Who wants a personal loan at 30% interest? If you have 1K, would you rather buy into Upstart or Jamie March calls? Upstart calls seem so tempting due to the leverage opportunity. Yeah, I agree. Upstart's pretty tempting. Short interest on Upstart as of today is now up to 38.92%. So almost 40% of the float sold short, with a $250 million share buyback still on the table. And as far as we know, unresolved. Do you know where the plethorus is? Hey Greg, I haven't been watching today to try and drive down the viewer count so we could run. Target 650. We need to ask, are they rolling the color, and is this MOASS? I don't know if they're going to roll the color today or not. And no, this isn't MOASS. I think both pronunciations are acceptable, but now I can't remember the way I pronounce it. No, that's not. Those are block orders in dark pools. So it's someone's going out and buying like one of every stock in XRT, and that's the combined bid. And FINRA's, posting it as the total ask for the entire block, right? That's not the price of fucking GME in the dark pools. Those people are morons. They did this with IEX before too. And they're like, oh, Jamie's going for $40,000 a share in IEX. Look at my computer share statement. No problem. Don't squash my squirt. Don't companies often do a press release and they complete a share repurchase? Sometimes. They don't have to. It's not far-fetched for it to happen, but they don't have to do it. Most companies don't. They just simply announce their share repurchase at earnings. Another leg up on SPX or dump. Still stable, but this is where the negative gamma was, right? So this is the point we need to watch. I don't know if we're really seeing any long side buildup. Maybe. Futures might pull back, which is not a good sign. If futures pull back to the 38.68 level, SPX is definitely going to come down. If they don't, we might be getting some long build up here at like 38.60, 38.55. We haven't really pulled back enough to get more leverage at 38.55, but we might be getting more at 38.60, 38.65. I've learned so much here. The best advice has been CCs and CSPs. What are some other stocks besides Upstart and GME that have similar covered call returns? I mean, you'd have to find stocks with high implied volatility, right? either you need high implied volatility or a high price. So, you know, you can get fairly good covered call returns for short periods of time on things like Costco, Caterpillar, Netflix, like expensive stocks, right? Or, you know, you can, you know, look for things that are cheaper with high implied volatility. Obviously, your risk is higher when selling CSPs and CCs on something with more implied volatility. And what's great about Jammy is that even though it has a lot of implied volatility, its movements are fairly stable and at least very well understood. Jamie is one of the better wheel targets in the market. I think especially if you understand it. SPY 2400 is not a meme anymore. It's probably closer to the valuation S SPY should be at, or SPX. Never gonna give you shares via married puts. How could I? Explain how Jamie worth $1 million at dark pool, but if I go in the bathtub and with the lights off and sell my fractional share, it fills it sub $20. Best bakery in New York City. I'm looking to get some oatmeal raisin cookies and carrot cake. I don't fucking know, man. Why? What a weird choice of like baked goods to try to score. Go to like Levain or something. I don't know if they have carrot cake. What I like about Upstart is the yearly Zimajewski score is negative 1.5 and quarterly is negative 0.79. Negative numbers equal great. It's also trading at less than one multiple from book at $9. Yeah, Upstart's real cheap and way over shorted. I said if it breaks 38.55, it'll go to 38.70. Get your shit together, man. We barely moved over 38.35 and then immediately fell back down. That is not a break. That is like a test with a little bit of a push and then a rejection. There is no 38 75 50 or 38 57 50 strike. Oh, turd, you beautiful son of a bitch. That green line's the borrow rate, right? It's a little hard to see with the coloration, but that's kind of exciting. Quite the grind up from November through early January and the borrow rate for GME back then. And is that peaking on January 13th? Oh, thank you. Or is that January 15th that it peaks on? Well, that's exciting. Maybe we could have MOASed if Ryan Cohn didn't split the stock. What a prick. Yeah, the last rolls we saw in like positions flipping to long vol were dated for the Jan 20th expiration. There were some February ones as well. On ES today we had a rounded bottom breakout. Can you play the song? No. That would line up. I mean, it looks like it lines up with deferred OPEXs, sort of. Didn't we have a deferral in June, too? I thought so. I mean, I'll show you guys. Hold on. Yeah, this one's not. Here, look at this one. This one's better. I think it's a little early to tell, but this is the pre. So this is like November OPEX here through December. And here's where the bar rate falls off before the January run. So if this is deferred out and they needed to use the borrow pool, that would explain the rise in the cost to borrow through this period. And then, you know, same for March, we saw a cost to borrow rise from January. I guess we see it really start to rise from Feb, end of Feb. That's kind of, hold on, let me see if I can zoom in on that a little bit. Okay, so this is kind of where the deferral would be here, right? Although it's fairly static right up into like 311, but they may have had some liquidity because the ETF FTDs. So that might be why we don't see cost to borrow rise until we start to approach March OPEX. But then May as well, we see cost to borrow start to move up here around the May's ETF FTD period. And then there was a deferral in June too, which would possibly tell us why. I mean, this spiked because of the split though, so I don't know. This one might just be noise. Like this spike here. I don't know if that's like just noise or not, but this is kind of compelling. We have a higher low. So we spiked up, dropped, spiked up again, and then that's where we're at right now. And we compare that to 2021. Looks pretty good. I mean, obviously we need to see how that continues to play out, but I don't dislike it. I don't think we can expect it to be as significant as it was in 2021, but even just the small correlation is nice. Hmm. Notice how the timely OPEXs have no increase in borrow rate. I don't care what Linux says. That's what I said. What do you mean? That's not your theory, Mr. Grey Pubes. That's literally the theory. Ah. Yeah, Juneteenth. If Gen 20 run started on the 13th due to deferred settlements, how come it continued to rise into Jan OPEX? If obligations were covered on the 13th, how did they build up more obligations for Jan OPEX that quick? The sheer volume of calls on the chain at the time, right? So if we go back and we look, right, this is where the run starts, right? And Apex is right around here, you know, maybe here, I guess you could say. The volume started to drop off, but then you have hedging, right? So, this from the peak here, this is, T plus 2, and we start to move back up again. And then, you have all the call volume from the massive options expiration here. And FOMO. Don't forget the fucking insane amount of FOMO, right? And look where volume spikes, right? Friday the 22nd. And wasn't Jan 21 the leap expiration was on the 15th? So this was, this was the OPEX expiration here on the 15th, and then, T plus 2. There's a holiday there too. Interesting. Now I wonder if this holiday was the cause of the spike in the borrow rate here in Feb. Feb had a spike in borrow rate too, right? Yeah. What is that? February 14th? Hold on. That's FINRA holiday settlement margin extension 2021. So MLK 13th extended to Feb 13th, 14th, 15th. Well, 12th through 15th extended Feb 3 to 8. And then Feb 9th through 12th extended to March 3 through 8. Huh. Well, that's pretty fucking compelling. I don't know what day that is on. When did the borrow rate start spiking here? So maybe, so the borrow rate maybe spikes on the holiday? What did liquidity look like for that? This is resolved with no improvement in liquidity, though. I guess liquidity improves a little bit there. Okay. Interesting. And then run for March OPEX here as well. Yeah, so March 4th, the day before that deferral becomes due, or the day the deferral becomes due, is the liquidity low point for that period. And then through March 8th, liquidity is resolved. I mean, the fucking lines up pretty well. Also, ban that walk-in guy. I'm just looking at the deferral schedule versus price action on GME through the early part of 2021 and the correlation that has to cost to borrow. I discussed this earlier. I think because of the disadvantageous positioning required to borrow from the prime lending pool. Obviously, volatility shorts would prefer to use ETF creation and market maker synthetic liquidity over actual borrowed shares at pretty much any point in time. The problem being if the realization of that liquidity does not come to pass and is deferred, there is nowhere else for them to turn for liquidity except the borrow pool. And I think that's why with deferred OPEXs, we see a rising cost to borrow. And the runs on GameStop through the early 2021 period line up with the FINRA margin extension dates for the holidays from the previous month, for each month. Yeah, of course I have, Stefan. I don't think there's any obligations from the split. It may be, but I doubt it. I think we saw the resolution of those through the August ETF FTD period. It should line up with all of them because if they're using synthetic liquidity from ETFs, then it should be kind of the same across the whole basket, right? If ETF rebalancing is deferred or delayed, like we see rising cost to borrow on almost all the stocks we're looking at right now. I think. Well, no, it's actually not the OG. Like the cost to borrow isn't necessarily the OG squeeze indicator. We had runs in 2021 that had 0% cost to borrow, and were very, very large, right? Like in June we ran up to the 350. We did in Feb and March too, and those were on almost non-existent cost to borrow. So it's not that the cost to borrow rate increase may be linked intrinsically to deferred settlements, but deferred settlements cause larger runs because now all of a sudden you have OPEXs that are stacking on top of each other, right? Like March. So the longer we go without a realization, right? And this goes back to the entropy shit, right? The longer we go without a realization of that liquidity, the further they're pulling that bowstring back. And when it's released, but we didn't necessarily see price improvements alongside those cost to borrow changes. Yes, we did. I mean, in every rise in cost to borrow, think about it. Even the split cost to borrow, which I'm not sure how important that one is because it does kind of look like noise, but it did precede very shortly the August run up, which was a large run. We moved up to $50. The rising cost to borrow preceded the May run. It preceded the March run, and the only other rising cost to borrow events were right before we ran in February of 2021 and the 2 months prior to the Jan 2021 sneeze. So yes, the cost to borrow would precede a run. Could delayed deferral cause higher FTDs? Yeah, it could. It could spike the FTDs. I do think GameStop has a hard time getting FTDs after the split. So, I mean, they may go up, but not significantly enough for it to matter. We might see higher ETF FTDs, though. It's not really that they defer the deferral, I don't think, right? I think it's that they, and when we say they, more accurately, let's call them short volatility funds or authorized participants that are using these ETFs for their liquidity creation are actually, their position is closed, right? It's the deferrals that occur after they close their position that can cause a compounding effect on the realization of liquidity and its return to mean. So it's the ETFs that aren't deploying that capital in the market, right? We're seeing lower and lower peaks throughout the year. Yeah. What's your point? This isn't an accumulate. The only accumulation you have of short interest is between OPEXs. After the OPEX, everything's gone. There's no more. There's no fucking underlying massive short position that's driving all of this. They build up obligations. They cover the obligations. They build up obligations. They cover obligations. As retail interest wanes over time, and fewer people are holding the stock long, then the price will drive down. And on GME, it doesn't drive down nearly as much as you see on other volatility shorts. If you look at Fubo or Bobby, the volatility shorting drives their prices down much more rapidly over a period of time because long holders are much more willing to sell. Whereas on GameStop, we buy the bottom. And so that, supports a stronger trend over time. But it still weakens, right? I mean, you can see that from the sentiment. Look at the poor chat in Discord and look at how many people are like prepared to sell on a test of 30. It's psychologically, it's very effective over long periods of time and destroying long shareholder confidence in the underlying stock. But that's also makes the position very dangerous on companies that aren't going anywhere, right? So companies like Upstart that, you know, have a very, very low chance of going underwater. They have a solid business model. They might not be performing very well in the current economic environment, but in a more favorable economic environment, which is likely to come, they will, right? And so volatility shorting stocks like that is very dangerous because interest can pick up, right? As interest picked up on GME in the months preceding Jan 2021. No, because most of the synthetic liquidity used on GME is used to hedge, right? And you have fewer call options now, and you have more available synthetic liquidity. The ratio is not the same. And the stock is more illiquid over time, which means that there's less capital inflow required to drive the price down, which means fewer obligations, less hedging, and less FTDs against a larger synthetic liquidity pool. Which overall will mean less FTDs. There's some short positions. I mean, GME's float is sold short like 28%, right? So there's some long shorts. It's not huge, but there's some. 21%. Why less FTDs when shares leave the DTCC? Because no one cares about that, man. All you do by DRSing shares is you reduce the size of the market, but you don't reduce the amount of available liquidity. What's the obligations warehouse? It's where Cenis goes to wait. They don't need locates. No one's locating. Locate's a reasonable assumption that the share can be found. GME is liquid. There is a reasonable assumption that you can short it. If I want to short 5 million shares of GME right now, you know, they're going to look at like IGH, and IGH has 7 million shares of GME, and they're going to go, okay, go nuts, right? That's it. That's a locate. There's no serialization of shares. So all shares, real or fake, are shares. Created shares are just as real as shares released by the company through the DTCC. Did JPM start popping their collar yet? I don't know, but probably not. They could start moving it today. They did last time. They started moving it early. And then they rolled it again the next day, which fucked everyone up. current deferral thesis, we might get a little pop in the basket around Jan 15th-ish, then more ups during OPEX. No. If you want to know what it is, go back and watch the beginning of the stream. I go over it pretty extensively. That's on SPX. Bullish consolidation. There's some long build up, but I don't know if that's gonna mean a realization of higher prices. Yes, still looks like it could kind of fail, although it is holding the 38.75 level pretty well. If ES can continue to hold, and SPX builds up enough interest at like 38.55, 38.60, then yeah, this consolidation might be bullish. But right now, there's still a little room for a pullback. Yeah, they're limited daily by how much liquidity is in each ETF. So how many shares of the underlying are in each ETF each day is what they're limited by. But only that. So, an ETF that contains 1.8 million shares of GME can create 1.8 million shares of GME in a day. Well, XRT can. Let's not assume that all ETFs are as wildly complicit, but XRT can. But over time, those ETFs can have a deficit of GME against their shareholding significantly greater than the actual holding. And it's the resolution of that deficit that is what drives OPEX runs. So, if I'm XRT and I have 180,000 shares of GameStop, but I have 18 million shares of GameStop on loan through creation processes, right? Then I have to write forward contracts to cover this deficit against my NAV, right? Until these are cash settled and I can resolve the forward. And then when I resolve the forward, what happens is the money from the cash settlement of these shares is then deployed on the underlying stock, and NAV is equalized, and the fund is rebalanced. Well, first of all, the deferral period for January is the 12th through the 18th. So I don't know where you got the 15th. And it wouldn't necessarily be a small run. It could be quite large. The shorts jumped back in August, not October. Is it reasonable to assume volatility players prefer delayed deferrals? They have to assume the holidays provide that opportunity. I don't think so, given that they all went long vol last week and are in a losing position now. TradeSpotting tweeting about Rex codes all of a sudden. Imitation's the most sincere form of flattery. Okay, now you've gone and done it. I bought Jimmy March 18 Cs and Upstart June 15 Cs, Jan 2024 30, 40, 50 Cs. You ruined my enjoyment of losing my hard-earned money. Fucking shill. Shame. Thanks, Visceral Records. You take a look at the GME March 40 contract and tell me what your thoughts are. It's very far out of the money. Is there such a thing as an ETF-based liquidity ratio? So generally speaking, the more ETF exposure a stock has, the more daily liquidity is available. Other factors should be included as well. Yeah, there's a lot of factors. And no, there really isn't. How about Jimmy March 35s? Nice. Why would short vol funds already have long vol and bleed theta? Well, they're not. They're bleeding theta, but they're increasing the value of their positions by driving up volatility right now. Jimmy volatility over the last. How many trading days is it now? The chart's in the daily. You can look at it. Since December 23rd, volatility rose on GME from 100 to 112% yesterday. It's dropped down into this morning. Obviously, we haven't had a lot of price action, but them grinding the volatility up via shorting offsets the theta decay on those positions because they're long volatility, right? And so we had a 12-point increase in implied volatility IV30 over the last 6 trading days, which would offset the decay on their position. What makes me think they had a bad spot? They're in a bad spot is why do it this way? Why defer unless you're in a bad spot? Especially when people are catching on, all they're doing is showing us how far they can stretch it. Maybe they just don't want to rebalance until the new year. Why not take advantage of the deferral? That money could be deployed elsewhere in the meantime, right? If you can get a, say you just got a $150 million payment, right? And you don't have to deploy that payment. It's not an escrow, right? But you don't have to deploy it until like 20 trading days later. You can either do it right now or you can do it in 20 trading days, right? You can do a lot with that amount of capital in a short period of time, even on a low yield investment, right? You can earn money on that money, first off. And then second of all, I think that the funds, like the short vol funds, are really not aware when the ETFs are going to choose to defer or not. I think it's entirely in the ETF's hands, which would explain why they enter long vol positioning the same time we did, which is now decaying because the ETF isn't buying, right? So the ETF has chosen to use a deferral, but they don't have to, and that's where it gets kind of tricky, I think. Because if you look at November, right? Like November 21. If we look at November 21, there's a holiday. The ETFs could have deferred settlement, but they just covered it all. There wasn't a lot to cover, right? And we see the price shoot up into Tuesday morning, where it then collapses. It is 0% financing. When you're a fund, you never lose money until you have to, right? There is value to having large amounts of capital on hand to do with what you want. Even if you're just stuffing it on RRP for a night, right? There's a yield. Yeah, but you said the 15th. AJ. It's very important to get those right. We have tools, Stefan. Don't worry about us. We're fine. Thanks for the suggestions, though. How confident are you in this new deferral theory? Is it full on tinfoil hat, or is this be another example of pushing one OPEX into the next? I mean, I think that's what happens. Obviously, the only confirmation that can be had is if we see price realization in that time period, right? That's the problem with any theories on GameStop is we have to wait until the realization to confirm it. I can't confirm it in advance. It can look amazing and fall apart. But it's supported by the data, and it would appear that the cost to borrow evidence is at least correlated. So, I mean, I like it. I like how it looks. I don't think it's full on tinfoil hat. It lines up. That not only do the deferral dates, volume, volatility, and cost to borrow line up, um, but it would explain why we're super fucking illiquid now and not realizing any price action. ETF managers just collect a fee. They don't. They're not funds, right? Not in that regard. Is it wise to close Jan 20 calls at a loss? Deploy them just prior to the expected run. No point in letting 2 weeks of theta burn. If I can enter Feb calls in Jan 10th, for example, right? That's correct. Yeah, that's theta burn is definitely something to consider. IV fell back off again into this morning, so the rising IV may not be a huge concern right now. But IV could rise, so that might be something to keep an eye on at least day to day. I'm gonna be out of the country mid-January. Can you ask him to defer it again? It's not really up to me, man. They must be short vol again. Look at the 15p, 17p sold that expire tomorrow. The 2375 Cs that expire Jan OPEX 2. They must be short volatility again. But those are synthetic long positions. Right, or they're just bullish on the price increase because they know they're going to cover the short position they used into yesterday, right? So if, yesterday when we were at $17, if you're selling 17 Ps and then knowing that you're going to close the shorts that you just used into the end of the day, why not sell 17 Ps and let them expire worthless? No, I did not say upstart to 69 in January. It doesn't appear that any holidays would extend that time frame currently. And there's no holiday extension for the Jan OPEX expiration period either. But yes, I'm aware of the MLK holiday. I got SPX 3835 0 DT puts. Serve me hopium. Yeah. It doesn't look that great. We have a lot of downside resistance at this level, and futures are almost completely stabilized and might be starting to turn up from the 3875 level. So I would say the consolidation right now, at least, looks pretty bullish. What happened to the entropy swaps? Much harder to track since the split. Options interest fell off a cliff, so I think it would be hard for us to look at the chain and determine if there was in fact 1/k hedging or not. that would imply an entropy swap, but they may still be there and they may still be hedged. It's just harder for us to reverse engineer the positioning. Any updates on the JPM collar? As in what? I mean, it's still just sitting there. We have a 1228 update that shows that the collar is very much still in place. I would be careful shorting Tesla right now. Tesla's been bouncing from 100. I think it'll continue to rise. Maybe like the 130 or 140 level. It was very overshorted. This is like short exhaustion and profit taking on the put side. But yeah, its rally could continue. Yeah, I mean, you can assume that the deferral periods apply to all of these stocks. They each have their own unique factors, but yeah, I mean, overall, yes, the same deferral periods would apply to all of them. If price action on Jan 12th, does that support further price action during Jan OPEX? Or does the 12th round, if price action occurs, support more run during OPEX? Well, if the price goes up and it puts a bunch of January 20th, 2023 calls in the money, that's going to support further price action, man. I feel like you're asking me questions like this is the first time you've been here, and it's not. What are you confused about? Maybe be more specific. What do you want to know? Because you're defensively asking questions about positioning. Just ask it directly, and I'll see if I can answer it. Do you want to know if your Jan 2023 calls are safe? They could be worthless by the time the stock runs, and they would need to go probably in the money. So calls with low delta are pretty risky. If they're near the money, like if you have like 20 or 22.50 or $25 calls, then potentially they could go in the money. But don't beat around the bush. Just ask the question. Liquidity on Jamie looks like they're building up some liquidity every morning, using it to short, and then covering it into the end of the day. That's really all that's going on there. Now, if there's a large put position, that's going to skew negative over time. Several days in a row of that will drive the price down. Is there a fairly large ETF FTD in early Jan? Let me see if I can find the last update for. Well, we get probably next week we'll get the next round of ETF FTD data. But it looks like ETF FTDs spiked the hardest across all the basket stocks on 11/15, which would be give me a second here. That would put us 11/15. That would put ETF FTDs for Jan 3rd. Would be the highest number of ETF FTDs. After that, nothing very nothing very significant on GMA, at least. I think Upstart FTDs are climbing right now. But those won't be on this report. Those will be on the next one. Although this report should show an increase in Upstart FTDs between December 2nd and December maybe 9th. And then a fall off into December 15th. And then after December 15th, it looks like FTDs on Upstart have been climbing again. Are you surprised that Upstart hasn't hit reg show again? No, I mean they can do a lot. They could do more to prevent Upstart from hitting reg show than they were doing in the past. They may be more cautious with allowing it on reg show now that it has more attention. I'm confused about the 12th versus OPEX runtime. Okay, this has nothing to do with OPEX. If it runs on the 12th, it can kick a run off that carries through OPEX. So if it begins running through the deferral period, which is, the week before OPEX, then that can drive a significant amount of the OPEX expiry options in the money, which could then continue a run on the market maker side. The 12th is Thursday. The following Friday from the 12th is the OPEX. I know it is, Carl. Happy birthday from back then. Who's driving the price down? The short vol players are probably shorting the stock and then letting it bounce into the end of the day to drive implied volatility up, so that their positions that are long vol don't burn up due to theta decay. So they need to increase implied volatility, which isn't uncommon going into OPEX periods or OPEX covering, for us to see implied volatility increase slowly, but increase. That buoys their position. Gotcha. So if you run due to deferrals, the only following run would be due to create a gamma exposure from Jan OPEX calls going in the money. Yeah, and then any settlement that would occur for Jan OPEX on the ETF side, if there is any. all OPEXs have some exposure, right? And that's kind of what we were outlining with like that graph Carl made where he was like trying to show that all OPEX entries show price improvement. There's always some, but not necessarily a lot, right? But you know, if price is already running and there's gamma exposure, then that can increase the effect of any additional exposure that would be due after the January expiration. Don't forget that that expiration, the leap expiration, is not only large on GME but on all the ETFs as well. I got transferred to like my reply where I made sure to make clear that you, much like The Simpsons, did already. I mean, over time, they should pick up viewership, right? And then they'll have more people to sell their trading course to. You guys can learn to draw lines on charts also. For how much is it? What is an entropy swap? It's a enhanced alternative to a variance swap. It only realizes change in volatility on returns. So they offset underlying price and short variance, which are inversely correlated. Why is that not considered manipulation? What? It's just an effect of market mechanics. How's that manipulation? Because you can't do it? I mean, seriously. I'm not trying to be an asshole. I'm. How is it manipulation? Where's the intent to collaborate to manipulate the price of a security? Their positioning simply has an effect, driven by market mechanics and the settlement of positions. That's not manipulation. Are you rolling your gens? I'm gonna keep the closer to the money ones. I'm gonna close out the rest. And then I'll open new positions. Having lots of money isn't manipulation. FINRA same like international securities fraud. The whole point of leveraging economies of scale is to manipulate it. Sure. But it's not stock manipulation as defined by the law or as considered a criminal. It's not considered a criminal act. Given access to advanced market tools and 100 million of relatively risk-free money, how would you make GME pop? Hmm. Interesting. I would probably wait till volatility shorting peaked. See, that's the problem, is they can just offset any significant buy-ins with ETF creation until they're ready to let it run. I don't know if you can actually make it pop. The DMM's too efficient. You'd have to buy enough to overload the DMM. So you'd need more than $100 million. You need a few billion. But if you could collapse like the risk tails on the DMM, then the price could explode. I can see them trying to push it. I think they're just going to keep doing what they're doing, which is shorting it and covering it. I'm not a centaur. I don't think they have a lot of shares with which to short. And if they need more, they have to drive up the borrow rate, which is obviously not ideal. So they're limited in their ability to bring the price down much further. And doing so, they'll need to bring it right back up again. So yeah, we might see another low, but it may not be very significant. Probably stuck kind of in the range we're in. Maybe one more hard push before it's all done, but new JPM collar peg is 38.75. Okay. Did they roll it? Is the trade in? Oh. I mean, that's not a 5% move. It should be 5, -5, -20. So -5, -20 for the short spread and the put spread. And then 5% for the call. 5% would be significantly higher than 38.75. Or at least it'd be way higher from spot. That'd put us around like 40.50 for the top of the collar. 40.44. 40. Yeah, somewhere around there. That would make more sense. I don't really trade a lot of four-legged options. It's pretty rare. What would actually be better is dispersing the synth long across a casket of meme stocks. The focus on GME and AMC. Yeah, if you could time the delta skew just right and go synthetic long, you could get a pretty massive amount of leverage for $100 million. I don't know if you'd be able to disperse it across AMC and GME. You'd probably just have to focus on one. Short condors are fun until you get fucking assigned on the short put. So it rejected at 38.55 again. Are we gonna get a pull down now? I think the push might be a bit exhausted. Maybe now we finally get a little bit of a drop. Futures back to 38.68. Oh, now's a chance to maybe get out of those puts if we pull back to the collar. Is SPX breaking down? It might start, yeah. This second rejection at 38.55 is bad. We had that like little period of bullish consolidation right here. We broke up, but with no force, and we got rejected again. So yeah, I think this can break down. I don't know if we'll fall back below like 38.40, but we might. That'll depend on how hard futures break down right here. But if you still have those like 38, 30, 45 or 38, 40 puts, now might be the chance to get out of them. Or at least over the next like 15, 20 minutes. How long are they just going to do this pre-market and aftermarket buy? As long as they can sustain it? It's not great, and it doesn't really increase, volatility very much, right? And then volatility can crush really fast. So it's not a great solution to their problem. That's why I only sell condors on Euro style options. Yeah. Yeah, SPX is better for condors. But it can exhaust some holders. Sure, yeah. And people sell. I mean, there's some amount of liquidity at the bottom. There is a downside to this though. On daily rebalanced ETFs, when you drive the price of the stock down, you reduce the amount of liquidity in the ETF, like the overall liquidity, right? So on ETFs that rebalance their holdings every day, or actively traded ETFs, right? By crushing the price of the stock, you reduce the weighting. So the lower the price gets, the less liquidity there is. With tech earnings approaching, where do you possibly see the QQQ bottom being? It could be pretty bad. I don't know. I don't really track QQQ very often. I'd prefer to just short NDX at like... I don't think 20, like sub 2040 is unreasonable into the end of quarter one. Or 240, sorry. Are in any SPY SPX? I have SPX. I have a 3835. No, 3835 puts, 3840 puts, 3800 puts, 3750 puts, and 3200 puts, different expirations. And then I have 3870 calls. That's it. Chances of 100% run on Upstart tomorrow, probably close to 0. Can't get your audio video to line up, and you sound like you just huffed duster or something. I don't know, just refresh the stream or like close it and reopen it. Maybe you just have like shitty cell phone service. Is there a run in Jan and all the basket stocks run? Could Fubo hit 4 or 5? Possibly, yeah. Why'd GME go down, Gork? Because they shorted it into the drop in the market? Active funds selling off? I really don't think they're shorting us very much today. I would sell all my Fubo calls if it popped to $5 and keep the puts. Interesting. Yeah, okay, you could do that. Wouldn't you? Alright. I guess. Wouldn't you want to close the puts and then resell the puts for more credit? Right? But they're not going to be up 80% because you sold so much fucking theta on them. I think I got my Fubo position entirely, then re-enter on the downturn around these levels again. Why wouldn't you just sell covered calls at these levels? Like, why wouldn't you just sell like a $2 covered call? If we hit $5, and you sell a $2 covered call, and it drops back below $2, boom, free shares. Right? If your cost basis is like $3. You're adding like an additional step that seems like it would add additional risk. Why no SPX call capitulation? Well, there just aren't that many calls. The long side buildup here is not particularly impressive. Neither is the short side buildup, if that's any consolation. SPX isn't very likely to go anywhere until the JPM moves their fat fucking collar. I think everyone knows that. It'll get really volatile when they do move it. Have you seen the call put out of the money $20 for Jan Upstart? Pretty bullish. Yeah, I have. There's been a lot of very bullish positioning on Upstart. Upstart is cheap as fuck right now. Everyone ties their analysis of stocks when you're new. This is something all new traders and investors do. They tie all of their analysis to the price. Everything is related to the price. That's all they think about. That's all they care about. But the price is just what the market's valuing something at the time, right? That doesn't mean that's what that thing is worth. And sometimes the market isn't valuing something at what it's worth. And that's generally when you want to buy something or sell it. Like the market valuing Tesla at $1,200 a share is not what Tesla was worth. That was a very good time to sell Tesla. I'm at the Jan 20th call put positioning. You mean like the delta skew? Hmm. Doesn't seem that crazy. Yeah, it was a little bit better yesterday, but it's okay today. Call IV is like 10 points lower than put IV for 25 days to expiry. This is a very advantageous time to go synthetic long, generally speaking. Yeah. When you say really volatile, how wide of a range are you thinking? 3,800, 3,900? It could be more than that, but yeah, I would say the $100 range we're in now, especially given that we're trading at the midpoint of it. What kind of companies are extremely difficult to evaluate? Mining, shipping, and like early stage pharma, biotech, and medical device. Bio stocks, mining, and shipping. It doesn't help that those sectors are also just rife with fraud. Reminds me of Bobby with how many out of the money calls to puts. I know. Do you have a regular port, i.e., long-term investment? If so, how's it doing? Pretty well. I do. I do have a long-term portfolio. It's doing all right. My GME is down quite a bit, and that was sustaining a lot of the profitability of my portfolio. But I'm still like 300% up from my cost basis at these prices. So, so it's not the worst. I'd prefer GME in like the $24 range. I can't really use it for margin anyway, but it represents a very large portion of my portfolio still. Less this year's been pretty good, but uh towards the end of last year it was more than 60% of my portfolio. What odd questions you ask, Roberto. God, SPX is just the worst today. The morning run up was nice, but now it's just fucking boring. Futures are still consolidating without dropping, which is I want to say bullish. But is SPX really maybe a little, it's starting to look a little more bullish. It's still lacking momentum, but I would say could recover here. Maybe pull back down one more step. I don't know. Like, we keep turning to the upside, but then there's nothing. So it starts to look like we're building some momentum, and then it just, like, collapses and we stay at the same price. This is generally not a good time to trade, or if you think this is something that's going to persist on SPX for the day, it's a really good opportunity to sell short strangles. You can make a lot of money selling short strangles on SPX when it's fucking trading sideways like this. The thing is, you have to be afraid of breakouts, so you generally don't want to do it in, like, if you do it, you want to do it into the middle of the day and then close them before, like, power hour, 2 o'clock power hour. Yeah, you can grind down a lot of theta between market open and like 1 p.m. on SPX, provided you have the margin to pull it off. It'll probably remain volatile into next week as, you know, more positioning builds up around our current price. But yeah, the initial roll is generally very volatile. Not because of the roll itself, but because of everyone jockeying for position into the roll. GameStop Twitter just tweeted red pill or blue pill. Are we in a simulation? Seriously? I know Ryan Cohen's watching this stream. And yet he still built an NFT marketplace. Stubborn. What DT on SPX strangles? Sold ones? 0. You want that theta to decay as quickly as possible. Unless you're a big fan of multiple $100,000 assignments. In which case, that's not that big of a worry. In the colors world, will we see obvious increased volatility? Yes. No, price volatility, not the VIX. Okay, so don't go trying to play a jump in the VIX on the collar roll. I don't think there's that much correlation there. I watched the beginning of the stream. If DV tweeted that because he knew the Rex codes were going to make things fly, such a Chad move. If he did, then yes. Correction, the Twitter intern and Jimmy watches the stream. More likely, yeah. Also, do you remember DFV holding on to Jan 15 calls worth like millions of dollars, even though expiration was quick approaching? Like, he was confident in that Jan 13 run. Yeah, I do. And yes, he was. He held that shit right into expiration. Elon got margin called for the Twitter loan. Well, I mean, he just sold a bunch of stocks, so he should be good. He's got cash. Elon's story is fake news. It's just one man's opinion piece. Aren't those loans tied to like Tesla's like market cap though? It would make sense, even if it is just an opinion piece. I'm sure he's got to make some sort of payments on them. Hey Dad, I've been away for a few days. What did I miss? Price cratered. Now we're bullish again because one green day. No, I'm not bullish because it's green today. Alex F., founder Shwayne Merriman and Fubo Sports, the live free-to-consumer TV network from Fubo TV. The leading sports first live announced today the first internationally streamed Lights Out Extreme Fighting event that will take place Jan 14, 2023 at Riverside Municipal Auditorium. Oh, cool. More stuff. Jan 12th date makes me nervous. That's my birthday, and nothing good has ever happened on that day. Well, it's Jan 12th through 18th. We don't know which day the deferral's on, so thank you, Courtney. That's cool information. I mean, it's a slow trickle, but Fubo's just picking up broadcasting rights left and right. So I don't know. Hopefully that turns around into something worth buying out. I know Amazon wants to move forward with their own like sports TV, and they've already done a partnership with Fubo for Freevee. It's possible that they're eyeing it for an acquisition. That would be an ideal scenario for Fubo, by the way. For long-term investors, a buyout would be fantastic. It wasn't a fake thank you. It was a thank you. Are the 11 Cosm shares I bought this morning about to rip? I don't know, man. After defending your thesis hypothesis for hours today, are you more bullish than how you started the day? You seem more confident and excited to watch the next week's unfold. True? I guess. I mean, I wouldn't have posted it if I thought it was bullshit, right? I would have just kept it to myself and talked to Dork about it. Do you think Amazon could afford Fubo? Yes, they definitely can. I wouldn't mind seeing Fubo get bought out at like a couple billion. My cost is 45 and I can't lower it as I have 3,000 shares. Should I just jump off a tall building? Probably not. That seems like a really excessive reaction. First of all, you still have some money. Not as much as you spent initially, but you still have some. You can sell covered calls. Maybe just wait till the price of the stock goes up. and try to get that cost basis into a more manageable range. You can use some of those profits either to lower your cost basis or to buy more shares at a lower price and then further average down your cost basis. Believe me, if you work at it, there's opportunities to get that cost basis down and under control without flinging yourself bodily from great heights. If you need to talk to anyone about those thoughts, or if they're feeling intrusive, feel free to reach out to me or any of the mods. If we see Jimmy run and Jen, do you think we see $30 to $35 a share? I'm trying to make a plan for strikes using option strat. I want to have good coverage throughout the chain. If we see a run in Jan, do you think we see 30 to 35? That seems reasonable. I think on a run, 30 to 35 doesn't seem excessive. So what are you keeping to yourself and just sharing with Doric? Oh, some pretty weird shit. You don't want to know. There could still be more downside, but yeah, we've definitely at least tapped a bottom for both of them. I'm not saying that we can't see another push, but we may not. Yeah, it's always just money. You can make more. My CPA said a long drop and sudden stop was not good for lower cost basis, but does eliminate tax burden. Not not the time for it, popcorn trader. Read the room, man. There's a chance that accumulation this low is part of a takeover play? On Fubo? Possibly. I can see that. I don't think Upstart or Jamie are getting bought out. I don't think Upstart would sell out, and I don't think anyone wants to buy GME, frankly. I have trust issues when it comes to centaurs. Can you help fix this? Listen, man. Stop calling her. Alright? All night long with the texts and the calls, and I miss your mustache. It's keeping me up. Don't tell them about our Only Centaurs Kickstarter campaign coming to social media platform near you at the end of January 2023. Only if my calls don't print, Dork. You know the rules. Oh, Oddest, formerly known as AJ, it's just one step closer to becoming the short volatility funds that we hate so much. Hey, Pickle Horse, is 2023 is too soon to position for the great uranium squeeze? Seems like Russia-Ukraine may have accelerated that timeline. A little bit, I agree, depending on how long the conflict persists. No, but I think you're still looking at like a 2-year holding minimum. I have positions in uranium already. I've had them for some time. I'm probably going to just continue to hold them. I don't think it's something you're going to need to worry about like missing the peak of. It's probably going to continue to drive up in price over the next several years. It takes quite a long time to get operating mines up and running. So, and the current output isn't sufficient to meet demand. Hey, Dad, can we get a little pickle rocket action? If we can go back above VWAP, maybe. This morning, I clipped it. I'll release the video later. I just have to format it. Insanity. What's up, Trash? Do we have it? Are we going to do it? Is the dream about to be realized? Are we finally done consolidating? The worst part about this is we're getting rejected on like the lowest amount of resistance on the fucking entire chain. Oh, it still looks like fucking garbage. Just retest 38.55 again. It's the worst day. I should definitely sell some strangles. It's going alright. I accidentally made a correlation to a tweet last night that I thought would be fun, and really all it's done is horn up people that are bullish about tweets, and I don't like those people. So now I'm dealing with like extras of them. And they feel closer to me, which is not what I wanted. I bought 4 Chevy Cobalts with my savings. Is this investing? I don't know. Ask Stefan. He says you can't recycle them. If you could ask any questions of the stock oracle and get perfect understanding of the answer, what would it be? I'd ask for FINRA regulation AI bot that could understand and explain. Hmm. What a weird hypothetical. I would probably just want to know market maker risk levels in real time. But I like yours too. I don't really care that much about FINRA at that point. You horned up Roaring Kitty too, don't forget. That's true. Yeah, I'm still a little sick. I'm feeling better, but still like really, really, really fucking tired. Posting DFV tweets same like charts with no label. Worse. If JPM rolls the collar, it's not if, they're going to. It expires tomorrow. How do you think we'll be able to see by the end of the week? By the end of this week? I don't know. We could just stay at this level into the end of the week. I mean, they might roll the collar, or we might drive down to like 3,800 and then bounce back to 3,850, which is still very, very volatile, right? But that doesn't mean we're going to see like a significant change in index pricing. That could be realized into next week. That's why I bought my 3870s for next week, not this week. I'd ask GTP to love me. Why don't you just ask it that now? See, let it say no and get it out of the way. All this talking about collars and strangles is drawing my partner's attention, and then I have to explain you don't mean that kind. Yes, I do. I do mean that kind. The stock market is all about dominance. It's very sexual. Never turn off your horny. It'll make you more money than anything else. Is this consolidation the rolling of the collar? It could be. I don't fucking know. I would say that the futures price action wouldn't indicate that. I think it's more just nobody wants to position until they know what's going to happen. So participants are reserved. Has that character gotten over food tasting like shapes yet? I think about them whenever I eat. I've texted with them a couple times. I think they feel better. I don't know if they've gotten over the lack of flavor. I didn't ask. I suppose I could find out. Somebody told me to eat a bunch of pineapple and then test the theory. Pretty much, dork. Yeah. Pretty fucking much. It is boring. Remember yesterday I told you I got sick from watching your stream? I have COVID now. Fuck my life. You did it to yourself. You want to see the tips? There's the tips. They're moving closer to each other. Or here they're just doing nothing. But on the 2 hour, they're moving closer to each other, which is literally what they do every day into the middle of the day. And then they cover again and they move away from each other. Although they did touch a little bit right here yesterday. I think that's where they got in trouble and they had to dump those big fat dark pool blocks in order to stop the price action. They don't want it slipping, right? Can't let that liquidity slip out of control for some unknown reason. I don't know why they're so afraid of it when they're positioned so well for it. It's kind of like they're trying to dock, but they're afraid of the tips touching, which makes that process really difficult. Are we still talking about stocks? Always. Can you look at the bar rate data I sent you and look back at NYSE calendar S&P rebalance? I think Jimmy Barrow goes up every S&P rebalance. That can't be true because it didn't go up through like the majority of 2021, right? Like from February 26th of 2021 basically all the way through January of 2022. The cost of borrow doesn't fucking move at all. Right? Or is it just more subtle? It could have an effect. I mean, the S&P rebalance theoretically would delay the realization of liquidity even without a deferral, right? Because it pushes out to that T+3 window. So maybe there's just a small spike that's not visible on the graph. Are you seeing something like that? Because that would push it out an extra day, which might cause them to have to lean. Yeah, the 4,600 rebalanced after the share offering. I think there's also long shorts on GME. I mean, 21% of the float is sold short. Those people don't want it going up at all, right? Anybody who just shorted GameStop at 25 doesn't want the price to rocket. So there are other interests. I don't think they're as extensive as they are in Upstart. I think Upstart, like, obviously, the long short interest is far greater. But there are still long shorts. And remember, those two positions aren't necessarily in line with each other, at least in the short term. Over a long period of time, volatility shorts and long shorts realize the same goal, right? But in during a shorter periods of time, shorter time frames, they very much work against each other. You know, if you're entering $25 shorts on GME at the same time people are entering volatility shorts, and they're going to run it to 35, yeah, that's going to put your position that you just entered seriously under fucking water. Possibly enough to create a risk off, right? Like I have no doubt that March led to some shorts closing on GME. We ran 160%. That's fucking not good. If you were short at $30 or something, you know, or well, at the time it would have been like 120. Imagine how many people shorted GME at like 120, 130 leading into March, right? And those positions got blown the fuck up hard, which yeah drives even more upside. Soul puts, you think that is profit taking as the OI dropped? I mean, I closed some of my sold puts when we went above 13 today. They were profitable. So yeah, why not, right? If the price is super low, you can sell in the money puts on a bounce. I think they did that on GME yesterday too. It's just free money. Especially if you're the person that shorted it down there in the first place. And you know you're gonna pull back some of those shorts. You'd absolutely leverage the position. Yeah, I think that yeah, why not? That makes sense. I think they can't borrow from ETFs during that time. Yeah, I agree. And I think if the but here's the caveat. I think if the ETF defers the rebalance, they can't borrow during that entire time, which makes them lean on the borrow rate really hard, right? That's the correlation I was talking about. I don't know if you were here earlier for my whole big speech, but I went into it pretty in depth. I don't think there's any OG short positions. I really don't. I think most of the shorts on GME were cleared out by March. I think they got actually squeezed out and they closed. But GME at 350 attracted a whole bunch of new shorts. Just like GME at 50 does. I'm not in a firm because I don't like the company that much. I do understand the similarities with Upstart, but they're different. And I don't like the company. I think they're gonna suffer extremely high default rates in the future. See you later, Joe Rowe. You want me to ban you? Would that help? Here. I'll time you out. No, I'm not long on. What do you mean long on MOASS? I'm long on GME. I'm not long on some fucking imaginary short squeeze that's gonna make everyone rich. What's the reasoning behind a run still happening if there aren't as many shorts remaining? There's still volatility shorts. Lots of them. That's why the stock's so fucking illiquid right now. There's no swaps. Swaps are cash settled. It wouldn't matter. Upstart doesn't keep most of their loan balance on their balance sheet, right? They act as a loan facilitator, whereas a firm is directly loaning money. They are a lender. Upstart's not really a lender. They keep loans on their balance sheet that they can't shift off onto second parties, but and a firm does that to some degree, but a firm maintains a much larger balance of loans than Upstart does. Also, totally, they're not the same sector really at all. Then S&P 46 on 8/4/21. They no longer have the same ETF to suppress the GME borrow. Well, they had less liquidity in ETFs too. But there was a rebalance in on the 4 to 6 in August. And we don't see a spike in borrow rate until, the next year, right? Jimmy Low was at 16.99. Why would Tesla squeeze? It's a piece of shit. Tesla will bounce because it's oversold and short positions are going to take profits, but Tesla's probably worth like $60, maybe less. I want Nvidia to drop below 140. Me too. Why are you the way you choose to be? He's very short Nvidia. Or they're very short Nvidia. I'm going to tell you right now, if you're super profitable on your Nvidia position, Sisyphus, a bounce here in the market would be a good time to reposition. Remember how we had that really long discussion about managing an individual position properly? No Tesla type long squeeze for GME? No. First off, we're not in the middle of a massive bull market turnaround like we were in 2020. Not that that can't happen down the road, but GME has no fucking value, whereas Tesla had a lot of value and even more perceived value. So Tesla became a stomping ground for every major investment firm to come in and go full fucking bull for almost an entire year. There was obscene amounts of money to be made on it, and no one wanted to miss out on the action. GME is not that. GME does not have, A-rated fucking bonds. It doesn't have, earnings potential of, several $billion a year into the future. We don't even have decent cash flow yet. So no, they're not the same. One is at the time was being valued as not only an automotive manufacturer, but being valued as the preeminent automotive manufacturer, a power company, a space company. I mean, with the potential for like all of the hopes and dreams of every techie fucking analyst in the market were packed into Tesla's future potential. GameStop is a at best pawn shop right now. So unless Ryan can go and can come up with some fucking ideas real soon, that either obfuscate what the company's actual goals are, like Elon did, or they're able to significantly increase their e-commerce sales in relation to their stores. GameStop's just not going to be worth a lot for a while. Don't get me wrong, they're working on those things, but that turnaround is very slow. It's slow growth over several years. I didn't say sell your Jamie at a loss. It's going to take time. It's an investment. If you want to sell it at a loss, I don't give a shit. Go ahead. But that's stupid. Jimmy does have something else, and that's that it has a lot of value in its volatility. And market participants, especially institutions that trade Jimmy, they trade it for its volatility value. Am I banned? No, I didn't ban you. I just timed you out. Do you want me to ban you, though? I could. What if forward guidance? Well, that would imply that GameStop's going to do something in the future and might increase valuations, right? Oh. Like SPX might be about to try to do a thing. It's either going to try to do a thing or get rejected immediately. Tough. Fuck, goddamn, I hate 3855. Nah, too late. Sold my DRS book shares. Oh no, whatever will we do? No one gives a fuck, man. No one cares if you sell your GameStop. I think you're preaching to the wrong crowd. I hope you sell your GameStop at a loss, because it's fun to laugh at you. Actually, I'd much rather hold this stock if retail didn't own it at all, because then it might actually have some fucking liquidity and trade at better prices. Like, people would come in and buy it because it's not being, all of the liquidity in the stock isn't being sucked up by a bunch of morons that want to put their fucking shares in cold storage. Maybe they'd even be able to get, money through bonds and warrants, and companies would be interested in investing in their future. Right now, the only way that's going to happen is if Ryan Cohen dilutes the float so fucking much that retail does sell. What are your thoughts on the 2-year swap theory? Well, given that me, Zinco, and Mauer were the ones that fucking were the first ones to talk about that, Zinco and Mauer before me, I think that the people talking about it have no fucking clue what they're talking about. That's what I think of the 2-year swap theory. I think they don't know what swaps do or understand them at all, and they're just saying bullshit in order to get karma. But bro, the swaps. Listen, if they swapped out all their debt from their shorts, it's fucking over. There's your 2-year swap theory. People think some fucking Archegos swap's gonna come in and save their shitty underwater position. Anything that tells them that they didn't make a mistake by buying GME at $400, they'll believe. Instead of accepting their sunk cost and moving on. Swaps are cash settled. That's the biggest misconception. And all of the hedging for swaps occurs in the options chain, which they don't believe in. Kirk's ranting is making me so bullish. Oh, Jesus. SPX to 3870. Only if it breaks 3855. Which is still not breaking out. I mean, for Superstock to accept a 2-year swap theory, they would also have to accept that options are what influence the price of GameStop. And then eventually, after realizing that, they would have to accept that there probably isn't a large outstanding short position on GameStop. And their entire MOASS thesis is built on false hope. Do you fantasize about opening a small fund and having 5 to 6 people under your employment and call it Centaurian Funds? No. Do you fantasize about working there, Carl? You mentioned a $2 billion buyout as a good valuation for Fubo. Any reason you came to that number? Forward earnings into, well, based on their profitability projections, a $2 billion valuation isn't out of the question. I can see enterprise value. Enterprise value right now is about 500 million, but if you factor in, their profitability over the next 2 years, or their plan for profitability over the next 2 years, then I could see that being about $2 billion. 1 point more realistically, like 1.5 to 2.3. No way, bro. Options are FUD. Exactly. I was a guy who full ported at 350, managed to get my cost basis down to 34. Now it should be 136 pre-split. It's a good one. It's decent. You're doing better than a lot of people. Still. I just bought Jamie $100 weeklies thanks to the rant. God damn it. That wasn't the point of the rant. Most of my life has been built on false hope. It has more endurance than you might think. Maybe don't do that anymore, though. What's stress? It's only 5 or 6 people. Can't seem to find an answer, so I'm asking, at what positive Zimajewski score starts being highly likely of bankruptcy in the next 2 years? Is it a score greater than 1? If you ask me about the Zimajewski score one more time today, Stefan, I'm going to ban you. I'm going to ban you not only from here, but the Discord as well. And for my thoughts and prayers. Full port 1 DT Jimmy calls a 510 gang. Thanks to the rant. Oh, Jesus. No, because you're asking me about a valuation metric, which I think is only moderately accurate in some usages. Over and over and over again. Like it's the most important thing in the world. And I don't care. I'm not your sensei. Should I be worried that whoever wrote the ATP app might also be responsible for sending 100 of the same New Year's alert for the past week? Maybe. Sounds like straddle overnight with Jan 6 contracts is on the menu for tonight. Probably not bad. Fuck you, Sir David P. It's really a shame that SS has so much cult-like hatred against options and real DD on GME. For a while, I thought having a community of intense research would be great for the cause. For a while, it was. And then the research started to become less and less like research and more like fan fiction. You getting banned from SS is one of the best things that ever happened for me. I used to follow you some pre-banning, but after I followed you daily, you're teaching me how to make money in the market. Thanks, newbie trader. Carl, stop spamming the chat. How nervous do you get when we talk about Congress bringing you in like they did to DFE? I mean, I'm mostly afraid I won't have the right poster. Fuck this job site John Wayne toilet paper. It's rough, tough, and don't take shit from anyone. It also really doesn't like airports. Trying to look up industry multiplier for streaming services can only find for esports, which is 3.4x. Well, I can tell you that Fubo is not trading at 3.4x. But you could look at, like, you know, what is it? Warner Media, Netflix. They're obviously not on the same level, but I mean that's the same sector. AMCX, maybe, who I also think might be bought out, but I'm not sure. Do you think Dr. Gingerballs is right about retail selling their DRS? I mean, yes, and but not all of them are, right? And the net, it's still up. Life happens, and the economy's not great. Rock in a hard place equals not teaching us your more granular methods of trading, plus making fun of our attempts to figure it out ourselves, with threats of being banned. As a paying member, I don't care if you pay me. Just stop asking me about the Zemajewski score. Jesus Christ. Can't you just Google it? I don't know why you think it's something I use regularly. This is the thing you do. You find a thing and then you assume I care about it, and then you ask me about it for days on end. I told you it has faults. Go find out what they are. Oh, fuck you, Cobra. I've probably banned more billionaires than I have regular people. I don't know if that's a good thing, but I just banned that fucking one guy who kept going off about, what was it? Oh, Nicola. Fuck that guy. I don't like people. I'm trying to find my own way. Well, I gave you what I got, man. I don't know how in depth you want me to get with something I don't use. I appreciate you trying to find valuation tools.
they are, you know, as a, they're more reliable than technical analysis, which is a good step forward. But they're not, none of them are perfect. None of them are going to give you 100% accurate answer of anything because those don't exist in the market. This is not the first time Stefan gets hooked on some random thing. It goes all the way back to before it was Stefan, back when he was just Stefan. I'm only up like 30% on my NVIDIA short right now. Do I want to cut some while we melt up? That's up to you. That's, you know, you got to manage your position. I don't know. Do you? Stop trying to get free satisfaction out of me, Doric. You can have it later in voice chat. People think that because you pay for something, you're entitled to the service. Maybe. Next thing you know, he'll be bringing up 2-6 traps. No, he's not interested in those anymore. Which is probably for the best. I don't know who that is, Dwayne Johnson. Here's what buying Dillionaire gets you. It gets you access to a community of other like-minded individuals who are also interested in trading. So you are able to immerse yourself in a group of people that like trading and are interested in trading and learning more about trading. Here's what Dillionaire doesn't buy you: access to me. I would charge a lot fucking more if that was the case. You want me to walk you through all your plays? I want 20% and a maintenance fee for the capital you deposit. Fuck you. No, I'm not doing it. Wishing you a happy new year, Garrick. May the Lady VWAP rain down sweet tendies upon your portfolio in 2023 and beyond. Thank you so much, Eddie Q. Happy New Year, man. I hope so. I hope she doth unto you as you would have her do unto me. I do answer your questions. How many of your questions have I answered? How much of my time have I spent talking to you? Maybe you're hogging time from other billionaires that have questions that don't have to do with Zemajewski scores. What's up, Grim 2? I don't have a case of the Mondays. I'm just a cranky asshole. I'm assuming the fuck you wasn't for me. So you can play some McConaughey for us? I heard whoever made that song is a real G. That was you. You made that song. Do you ever split stream when you do a pee-pee? What? But I only have one pee hole, I think. Why would that happen? Do you have a blockage or some sort of infection? It's very weird. Maybe you have like a kidney stone stuck in your drain pipe there. Why do people want to talk about indicators that work for them instead of the companies they're trying to trade? I don't know. Me, you, a deck of tarot cards in our future. I'll pass. Happens after playtime with the wife on occasion. Well, okay. But that's not just random, right? That's for a reason. That's because there's a blockage. Maybe your vast deference hasn't fully closed or whatever. You got some gunk in the tube. I've been on 3 back-to-back meetings with work this morning. What's up, man? Getting a small break for the next 10 minutes. I want to ask you how you're feeling. Are you back to 100%? No. I was at like 80. Now I'm at like 53. My first time catching your stream, I walked in on the most comprehensive description of a pigeon. I knew then, as I know now, this guy is the right kind of pendant I trust. Oh, Jesus. Check the M's. Secret pronged urethra penis. Thanks. Everybody wants to hear McConaughey say yeah. Oh, God damn it. Who do you hate more, me or Stefan? Fuck you, I'm not saying it with that god-awful F. And fuck you, Stefan, for taking advantage of Girk's pronunciation fetish and adding that stupid F. Cheers. It's a PH, not an F. And I hate you both for different reasons. Which calls can I buy to make you back to 100%? Can you buy $35 billion worth of in the money calls on SPX or $35 billion worth of e-minis at like the 3830 strike? Those would make me happy. I thought you'd say "fuh." Oh, I see. Up fart. Yeah, if there was a McConaughey song that didn't reference rounded bottom breakouts, I'd probably play it more often. Their pickle in my jar. What do you think of GameStop's Q4 profitability? Are they headed in the right direction? I think so. I'd like to see positive cash flow sustain. But yeah, I think they're focusing on short-term profitability. We'll see how long it takes them to realize that. It may not be as short-term as indicated previously. But concurrent quarters of positive free cash flow would be very good for the future valuation of the company. But I'm already mad at him about the cobalt shit. Can we get a sicko meter? No. There'll be no meters. I don't like having my sentiment measured. Wouldn't someone buy 1 billion of GME at market would do better than 30 billion on SPX? Yeah, but I don't have that many calls on GME right now. If they bought $35 billion worth of GME, I'd be okay with that too. Just 35 billion market order. Can you help me unfuck myself? I went ultra long cobalt futures, only to realize it's being phased out in most tech and it's recyclable. Oh no. You don't need calls, you own half the float. I do not own half the float. That's ridiculous. Not even fucking close. My grandma called me bumpy tongue dumpling yesterday. I have no idea what that's supposed to mean. You're not alone. We at least play the song when Jimmy breaks 19 before power hour. I'll think about it. This bottom isn't rounded enough yet, though. A billion synthetic logs on Upstart would be nice. That'd be pretty cool. In the money, though. Someone making a large IV play, close to 1,000 GME 127.50 Jan 24s bought in the last 10 minutes. Maybe. Someone's bullish, or just afraid of losing money. Recycled cobalt can't be used for e-vehicles. That sounds like e-vehicles aren't sustainable. That's something people should probably consider. Have you considered that if the supply fails, that doesn't necessarily mean that the demand on the supply will increase? It may just mean that the industries that rely on that supply die. I just switched from Upstart to Jimmy right when Upstart was getting a little spicy. Are you calling me a shill? Any chance I can get you to volunteer at my church's youth group in Iowa? I would just need a weekend of your time for you to cover travel and lodging expenses. You're a great motivational speaker. No, I've already got my own cult. Thanks. Do I get a prize for making you brain white 2x this month? Can I be your personal hoof polisher? You've been a muse recently, and it's appreciated, Bob. It's ironic that I'm short the things that rely on cobalt right now. Well, some of the things that rely on cobalt. I like copper. Bullish on copper right now. Welcome back, Sir David P. Why were you gone? I think my 140 share purchase of Upstart has triggered MOASS. Maybe it was the straw that broke the camel's back. Is that the saying? I can't remember. Did you say copper in a southern accent? I need to think about it. Maybe not. When you break the camel's back, you can't get fooled again. That's true. Fucking deceptive camels. Copper in a southern accent is just copper with a long drawl on the O. Copper? Huh. Okay. So more like copper. Okay, I nailed it. Thanks. Upstart's so hot right now. It's going up. People need to relax. Why do they put all the cholesterol in the middle of the egg? Hmm. recovery rates for cobalt are 95%, and there doesn't appear to be any issue reusing it. I'd love to see like a source paper on that. But several EV manufacturers have invested heavily in cobalt recyclers and are moving into battery tech that not only uses less cobalt, with new chemistries promising only 10% cobalt usage in each battery, with 80% nickel and 10% manganese. But many are also replacing cobalt with iron, which delivers not only a cheaper battery, but with greater capacity. And iron, I think we can both agree, is easily found in abundance. Like, I don't see the profitability in going long cobalt. It could go up, but the industry is, I think, still pretty flexible, and also in its infancy. So demand is not going to be astronomical, right? No, graphene research never leads to anything. Iron? You mean melted dirt? Why did they put all the iron in the middle of the egg? I got into graphene before it was cool to get into graphene, and it's still net me not very much. Yeah, that's what most graphene research appears to be, is people just getting grants and then being like, well, here's what we found out. Don't cheer on SPX. It's shown itself to be incapable of doing anything today. Why would I have Instagram? A lot of institutional and government grant research money got pumped into it for years ago. It still trickles in, but nobody's been able to produce anything compelling that's also cost efficient. Yeah, I've heard similar takes from a lot of other people who have worked with graphene projects in the past. It's either not scalable or it's not cost efficient, or both. I'm bullish on Shake Shack under 36 buckaroos. I really don't like their food. What do you got, Dork? This is yes. I'm looking at like almost the same thing you are. Yeah, I'm on the 5 minute, but it looks like it might bounce. There's like so many hours of bullish consolidation. I think ES is going to need to push up pretty hard for us to clear that negative gamma on SPX, though. SPX should probably be trading a little higher than it is. But I think the gap in pricing is creating like some arbitrage opportunity that's keeping SPX a little bit suppressed. Should have sold that condor. I sold a short strangle. It looks currently like we're at least going to hit power hour with it being worthless. Any clue why the MULN borrow rate is 315%? I don't know. The cost to borrow for retail is very high. Not a lot of available shares to borrow. Could be high insider ownership, small lending pool. Does it have a tiny float? I have a relative who works at Shake Shack Corporate. She's their lead accountant and has told me they don't make that much money as far as the change should go. So there's that. All right. Shitty margins, maybe? Use like 85,000 margin per leg. It's already up though. I'm probably gonna close it soon. There goes Cosm covering those FTDs. Yeah, cool. Look at that. I used to work for 3M, the bee's knees for material science and nanoparticles, and yes, precisely that. Scalability manufacturing is cost prohibitive, and regulatory approval for applications that matter equals too long. Okay. Do you just buy Cosm or get stopped out of something else? I just closed my short strangle. Upstart finna squart. It's having a nice day. What was the ROI for the 90 minutes of holding the short strangle? Oh, not good. It was longer than 90 minutes, but it was not good. Let's see, I made 3,100. Yeah, not great. The margin requirements are lower if you do it on Spy. The biggest problem with those is it's hard to leverage a significant amount. Did you ever do those deep in the money AMD calls for June yet? Nope. Still waiting. I can't decide where to put kids' college fund long term. Docu, Google, Apple. I want all their eggs in one basket, just like Dad. Oh man, no diversification at all. Would you say next week is probably the last window to let up on calls to the GME run? No idea. No, seriously, which one? I mean, of those three, Google's probably got the best moat. Tomorrow's collar move should warrant a straddle because of volatility, right? I mean, every day is warranted a straddle for like the last 4 weeks. But yeah, I'll be picking one up tonight. Oh, he's serious? Microsoft? Microsoft all the way. Yeah, Microsoft's a pretty good one too. But he didn't say Microsoft. Do you ever think that Davia is your son from the future? Come back to the past just so he can make you proud before you leave to pick up milk and never come back? No. That's not necessarily true. If they can continue to pull back SG&A and they've unloaded a significant amount of inventory over the holidays, they could maintain positive cash flow for Q4, right? That would be good. We're not talking enough about moats in here. Probably not. Or maybe we're already talking about them too much. You ever wheel Microsoft? Probably. Do you think Fubo might need a share offering to keep the company alive in the next 2 years? It's possible, yeah. They have an offer already that they can deploy, but they've mentioned that they don't want to do that at these prices. They have money right now. They have cash. I think they have warrants also. I bought an Xbox controller for my PC today. Jamie MOASS confirmed. You did it. You're the purchase that flipped cash flow positive. Congratulations, StruggleWorks. Thank you from all of us Jamie shareholders to you and your Xbox controller. What's the most ridiculous feature you would add? Definitely a water slide to an indoor pool from my bedroom. Girk, just got a meeting. I'm gonna use my Christmas bonus to build a moat around my house. What dimension should it be in order to keep the pagan raiders from breaking in? Thanks. You probably want it to be at least 30 feet wide. I don't know how much the depth matters, but the shallower it is, the more crocodiles you'll need to put in it. I used to wheel Microsoft and Apple, AMD, and I put all my money in Jimmy, and now I'm down 35%. Nice. I mean, you'd probably be down 35% on the other ones you mentioned as well. Imagine getting assigned on Apple at 150 right now. That sounded like sarcasm, but it's funnier if you don't see it that way. Former siege engineer here. You need to find a stack with higher elevation and versus features like a moat. Elevation is the greatest natural advantage and is typically on rock, which is harder to dig. Okay. What about angled walls? Crocodiles. I was gonna use freaking sharks, the freaking laser beams on their freaking heads. Crocodiles are way more dangerous. Starving saltwater crocodiles. Are people asking about wheeling? Most in here can wheel a fucking tire down a hill. I don't know. People like to talk about it. Ooh, bull hippos? Yeah, that could work too. Probably need deeper water though. I was thinking of not even putting water in it, just toss a bunch of financial YouTubers into the pit, so that anybody who tries to cross will be endlessly shilled with useless trading strategies. That'll keep them out. Did you already talk about how GameStop Twitter responded to you? I have no idea. Neo Gurk, you are the one. Thanks, Superman. Current siege engineer. The sea bass will revolt, as will the crocs. You need corn and wheat and elevation, as the former siege engineer suggests. Why are so many of you siege engineers? I've really attracted the wrong audience. Another day of asking Gurk for advice they'll never implement in practice. Far out of the money, weekly as it is. You ever talk about Berkby? I don't really trade Berkby. I know some people that do. Is it true that massively large companies can financially back hedge funds to attack their competitors? So, for example, Fibo getting attacked through hedge funds by competitors? Yes. AMD knows all about that. Greg is somebody who's not a siege engineer, but is actually an engineer, and has sent you many gifts of catapults. Wind Moon. Thanks for your contribution. We're not leaving. Thank you, NW. I appreciate it, man. Who's your trebuchet guy? I don't have one. I'm leaving at 4:03 p.m. Eastern. Me too. If DRS turns fake shares into real shares, is that also how Geppetto turned Pinocchio into a real boy? By DRSing his wooden ass? Maybe. Still 846 viewers. Sounds like 200 too many for a run. Power hour.
5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
I'm still here.
Wouldn't fridge stream? That's not a thing. I can't leave. I have 3840 puts that I'm gonna have to turn into a strangle because they're never gonna print. That is where the swaps are buried. Upstart is looking primed to run into next week. Exciting times. It's very compelling. My sister wasn't pleased, and I tried to explain there was a person on my pickle-themed gambling club. Wait, what's this in regards to? Did I miss the first half of this? Why are Pillsbury Doughboy and Bipolar Bear the same person? Yes? Oh, okay. Kirk's baby put their pickle in my jar. Daddy Win Moon. I don't have any children. What is this? Bud. Technical bounce off a low. Is she gonna Gen 6 for strangles? Yeah. Even with the big volatility, I'd rather have the 6th. Both of those things, insanity, but also self-study. This is a very boring day. I really liked the beginning of it. The 180 BPS move up was really cool. It's just that we haven't done anything since. What is an intermarket sweep order? It's kind of just like they're trying to get a fill anywhere they can. So it's like all exchanges. Well, the role of the JPM collar caused VIX to go up. Not necessarily, and don't try to bet on that. It's a terrible play. Oh, why do things have to halt and to close? Why does everyone want that? I don't like. We don't want halts and to close. All right. We just want to feel alive. We haven't halted since August. No, October 31st. How good is FOMO for this position, though? Really? Like, All they do is buy weeklies and then sell too soon. Upstart has a bullish reversal on the 4-hour. And a 6-month descending wedge. So that part looks pretty good. I don't use OBV. Yeah, some of the technicals look pretty bullish. The nacho of truth. Remember when Dorito of Doom and the Golden Cross were the end games? No. Remember the Pokeball? Ironically, we ran right after the Pokeball got shorted really hard. They still like to short technical breakouts on GMA. Free money. I liked the capitulation pimento the best. The pimento made me a fuck ton of money. God, I miss the pimento. Does SPX have enough puts for another pimento? No. A pimento at this point would be very, very boring. I know you can't handhold us through every play, but with a Dillionaire membership, could you at least handhold me through opening a brokerage account? Yeah, I can help you out with that. So you find a broker that you want to be with. You go on their website, and then you click sign in or create new account, and then you create a new account. Just follow the on-screen instructions from that point forward. I love that style of TA Pimento. I mean, it wasn't really technical analysis. I was trying to simplify the effect of time and positioning in the market in a way people could understand. The cooler part of that was when every analyst in the market said we were going lower, but I was right. Oh, I was so right. God. Fucking bears. Thank you, Stefan. I tried to open a Vanguard account, and they said I need to deposit money. How do? Probably from another account where you keep money. Oh, never mind. Oh, there's no answer for you. I will decide if there's a point where another pimento is advantageous. Well, I'll let everyone know if it happens. Yeah, I realized that halfway through my sentence, Popcorn Trader. Maybe just try to get a job at Vanguard. If Upstart runs next week, how would that affect the Jan 12 deferral thesis? It could still run on Jan 12 too. The best thing I ever learned is buying leaps don't get as much exposure, but also you don't have to worry nearly as much. That's true. It's nice to not think about it. Don't analysts just predict everything so they can claim to be right and accurate on every market move? Not usually. They just go on the news and say whatever their bosses tell them to say. Now that I've figured out Monte Carlo, I've realized that all analysts were doing in 2021, all up until a month past the top, was looking at Monte Carlo sims and being bullish on random walks of data. Yeah, there's a pretty significant amount of like fund analysis is done via Monte Carlo simulations. So you can assume that, yeah, for the most part they're doing a lot of those and hedging accordingly. But let me guess, everything looks like it's going down now, and then in a bull market everything looks like it's going up. It's not very compelling generally. I guess the more humiliating way of asking that is, if Upstart ran next week, I'd be scared to sell at a profit because of FOMO for Jan 12. You know, you could sell and then just buy back in, right? Puts here on SPX, I already have them. They're just not printing. I'm gonna have to buy calls at 38.55 into tomorrow because, well, my puts aren't printing. So I'm gonna have to turn them into a fucking strangle, which I'm not happy about. I saw the volume that came on. It wasn't a lot. It was like 1,000 contracts, and they're not very expensive. Somebody's YOLO. It looks like it's going sideways. Well, if you take enough walks, you're eventually going to find the most efficient path, right? Markets move, in my experience, Dork, markets move most efficiently from left to right. I fucking hope so. I want to close these goddamn puts. XRT finally rejected. Hey, 38.49. Oh, I could buy 38.50 calls here. That'd be a better straddle? That's not really a straddle. Nah, fuck it. Are you bullish on Upstart through the end of the week? No. I'm just bullish on Upstart. The time frames at this point aren't really important to me anymore. Why is everyone talking about Upstart running next week? I don't know. Bounced off of resistance. People are excited. Don't get me wrong, it's compelling looking. I wouldn't mind liquidity being realized back to the earnings level. That'd be cool. That's why. Ooh. IWR liquidity is picking up today. Maybe Upstart is starting to move. Man, look how fucking hard they slammed IWR after earnings. Look at that shit. I mean, they hit bots really hard too, and Upstart, but IWR got fucking beaten to a pulp. Is that its lowest level? Yeah, it's its lowest level since July of 2021. What did we do back then? Ooh, I like what happens after that. That's enough of that for today. I'm not even kidding when I say that I just laughed like Dr. Evil when I saw that. Let's not talk about it anymore, Dork, okay? Just quiet. Oh my fucking god, why won't the SPX break down? Man, Upstart... Fuck, that's bullish. I don't want to say it, but it is sold 40% short. You know, and like... No, Upstart's way more illiquid than Jamie was in 2020. Way, way, way more illiquid. I know it's cheap. How many payday loans can I squeeze in before they cut me off? I mean, just see what Upstart will offer you first, man, right? No, weeklies are too soon. God, that's stupid. Upstart has negligible interest. I'm just saying. Oh, sweet walking. The interest is built in. Do you know nothing of Composite Man? The shorts are the longs, man. Should you explain to walk-in the number go up effect? I think he understands that part, or I hope he does. But people are buying it. And Upstart has less liquidity, so it's even more sensitive. Upstart is buying. Yeah, what about Upstart's $250 million? How much does that buy at 13 bucks? So they could buy 20 million shares, which is like a third of their float. Almost. Roughly. Let's account for slippage. Let's say 18 million shares. Who the fuck would short a company with a $250 million share buyback on the table that hard? Like, I'm serious. It's beyond stupid. Yeah, they could also just buy back all their shares, trigger a short squeeze, and fucking sell 2 million of the shares back at the top and recapitalize the business completely. Let's hope their CFO is listening. I'll just add him in a tweet. I'm saying it has almost zero risk of bankruptcy. Yeah, it's extremely low. Which companies are most threatened by the upstart business model? Probably Experian, FICO. TransUnion, all of which are trading at significant multiples more than Upstart is, and having the same issues with an illiquid credit market. Share buyback. I love me some regulatory liquidity events. Sometimes, walking, all you need is for things to just change a little. That's much larger than Ryan Cohen's buy-in. When RC buy-in and rug pull Upstart, I don't know. I don't know what value buying into Upstart would have for Ryan Cohen. NFT loans. GameStop could start loaning out the Ethereum that they make from transactions on the NFT marketplace, and then they could actually call it an asset. They have a lot of runway already, though. They still have another 1.2 billion, an extremely low overhead. When's the soft deadline for the buyback? I think they have to be completed by today no, I think they'd have to be completed by tomorrow. I don't think they have to settle by tomorrow. They just have to be transacted by tomorrow. Yes, it would be prudent not to complete the entirety of the share buyback and save some money, but they have plenty, and credit markets will probably stabilize pretty soon, or start to stabilize. Housing prices are already coming down. Car prices are a little slower to come down, but they will. GameStop provides loads for $70 games and new consoles. Don't they already do that through Affirm? What's this about a gap over 300 filling? We don't talk about that. Same way we don't talk about GME's gap at 350. Actually, not necessarily. I've seen share buybacks in the past where nothing really happened until they were announced. You'd be surprised how few market participants pay attention to liquidity. Assuming we have an OPEX run, and knowing prices today, what price did you sell in the money CCs at for GME and Upstart? I don't know. It depends on how high we run, right? That's a big factor, so it's hard to say. Some percentage from the top in the money. So you're on Gen 5, 3875 Cs. We're strangling overnight with something like 350 Ps. Yeah, especially if we get a move up back into like the 385.55 area where you can get a little bit of a discount on those puts. I think I'm just gonna buy like some 3860s before close and then use my puts as the other side of the strangle. How fucking annoying. What's the difference between mechanical liquidity and regulatory liquidity? One is just hand wavy and whatever until Reg Show or 13F or whatever that makes it regulatory liquidity. Yeah, that's true. It's not a problem until it is. Everything has infinite liquidity until it becomes an issue. But that's part of providing an efficient market, right? As people should just be able to go and conduct their business without having to worry about that, because the market should be efficient. What strikes did you look at for upstart vol play? Currently considering Gen 24 100, but spreading commission need a lot of value. Maybe look for something with more liquidity in the strike, or like a tighter spread. You talk more about SPX SPY. It's still flat. There's nothing to say. What do you got, Carl? Stuff? What kind of stuff? Wait, what the fuck's with the fails on 11:30? That's a lot of fails. Lines up. I can send you a list of the... Here, I'll send you a CSV of the ETFs right now, Carl. Did Upstart just scaled a massive gamma at 13? How big is that? I don't think it's that massive. 1250 is bigger. 13's kind of negative right now. Across all expirations, at least. Gamma flip points at 1522, which is kind of all that matters. Huge amounts of call buying coming in on Upstart at 1250, 13, and 14. Huh. I flipped my position and got some profit out of it. On Tesla? Oh, nice, man. Did you ever go through a Skrillex phase? No. It wasn't a phase. No, I'm not that big of a Skrillex fan. None of my eggplant parm ever makes it into the trash can, Mr. Gray Pubes. Nice try. I like the band that was Skrillex was in before he left the band because it was destroying his voice. Yeah, but then like he never used his voice again. I like Flex Pavilion. Not Nero so much. I haven't listened to like EDM or dubstep in a long time. Your 15-year high school reunion is coming up, and the Central Park plant guy wants to meet up with you. I'm not going to that. Oil choice for eggplant parm. Like for frying the eggplant? Something neutral, ideally, with a high smoke point. Canola is good. But you should have olive oil in your sauce. Ganesha equals the remover of obstacles. Oh, Christ. I'm very happy you found your answer, Stefan. I just spent a bunch of time priming some things. Is it the toxins I was around, or is Upstart looking real nice? You know what? Fuck everyone, alright? The fucking stock's up like $1 from its low, and everyone's acting like it's the next best thing. After listening to days of whining and crying and complaining and I'll never financially recover from this statements and threats to jump off buildings. I can't wait for the Congress to pull you and ask you what you talked about on stream to cause the markets to melt up. Eggplant parm mostly, along with other tasty delights. About more at the lows. Why are you gaslighting me? Why are you gaslighting me? I'll update my list later tonight. I get off work in 20 minutes, and I want to hang out with the wife before she goes to bed. All right, man. Take your time, whenever. Safflower oil is good. Isn't that just canola oil? Next step is we love you, you're the best, blah, blah, blah. How do we join the Discord? There's a link below, but I'd prefer if you just stayed away from it. Check out the Upstart bid ask. Nice and tight. I'm up 8% on some Fab Upstart 25Cs. I'm pretty much a financial guru. That's what everyone says when they join the Discord. Bros, quick, I need advice. I invited a cute coworker out to get coffee, and I don't know how else to entertain women besides inviting them out to shoot pool. Someone give me some follow-up ideas. Feed them. Feeding them is good. I don't know what there is to do in Oklahoma. Maybe take her to the pond, show her your pea collection. It's not filled. The roof pool is empty. They're building like it's very slowly building like a small house over it. They eat like hay, oats, kibble. You don't have to, I want to say you don't have to feed them anything fancy, but then I remembered Oklahoma. Take them to the nicest restaurant in town. Drink, eat, be merry. On a first date, but then I'll have nowhere to go but down. Well, if you go down the right way, that'll be sufficient. Trash. What's the dumber short of these prices? Fubo or Upstart? I don't understand the ongoing shorting on either at this price. Nothing else to do but just keep shorting. Like Dory, and finally just keep shorting. That's what they're doing at this point. They just keep shorting. You know, that's a very good point. Nicest restaurant it is. Boom. Don't show her your portfolio. Well, I don't know. Probably don't. No, never come on weak. That's how you fucking end up in the friend zone. Coming on strong is you come on as strong as feasibly possible without saying I love you or being creepy. Don't be needy. Yeah, needy is not good, but making your intentions well known is not a bad idea. Sure, Gurk support it with your name photoshopped to it. Is that what you've been doing? No, not like that. Gross. You come on strong with confidence. You let them know what you're after. But don't be pushy. It's not that hard to do. Faint heart never won fair maid. Ever show a woman your Wells Fargo account balance at the bar? Actually impossible. Whatever you do, don't be yourself. Let them know what you are after short of when you're too serious, and she can't leave you for asking for another life savings to YOLO on CERN puts. I've taken plenty of girls on dates, but normally they're like friends of friends, and I have a jumping off point. Create the jumping off point through open-ended questions and actual and or feigned interest. Talked nonstop about her feet and shoes. No, that's Hazy's move. There was a guy trying to create a jumping off point for his GME shares, but you shot him down. Way to go. I didn't. I lifted him up and pulled him away from the edge of that building, I hope. Come on strong and don't be pushy. Same like having conviction in buying theta. Exactly. Absolute confidence in all things you do. I just think it's funny when people are like, I've taken lots of girls on dates, so I'm an expert. When to me, going on tons of different dates with different girls feels like the opposite of an expert. I guess that would depend on your goal. I mean, do you listen to the guy who's like, I went on one date once and found the love of my life? Because I don't trust him either. I trust that guy. There aren't any tall enough buildings in Idaho, unfortunately. True. You'd always just shove an entire potato in your mouth. Don't do that. Stop talking about me. Yeah, that's my husband. He's welcome. Guys, I caught one fish. I'm a fisherman. You mean showing up with an edible pimento cheese is not a good idea? I mean, if you've got wine and crackers, maybe. Is there an inedible pimento cheese? Another thing you can do is create your own funny, flirty storyline with the girl in the story. It can be a nice go-to anchor point to keep the conversation in a flirty direction. Wait, are you talking to this girl about some other girl? That's not a good idea. Or you've made up a story about her, she's gonna think you're insane. Like, let me tell you this anecdote about us. I just met you. Upstart is moving up at a steady pace. Pace? Place? Pace? Did I say place? Pace. That definitely could have been misconstrued as creepy. Exactly. What's the meanest thing you said to a New Jersey girl to get them interested? Oh, I've never said anything mean to a New Jersey girl. I don't go to New Jersey. Tell Upstart to chill out. I haven't rolled yet. You think you're confident enough to convince two girls into a three-way? How would you entice? Oh, that's tricky. Yes. I'm confident enough to fail in the attempt, at least. They're already in New Jersey. You don't need to be mean to them, too. Everything is about delivery. You gotta spruce it up. Saying it in monotone makes you look creepy. Give it flavor, animate it. Draw them a cartoon. I'm not Boston chick. Oh, I've said some things I'm not proud of to girls in Boston. Successfully. Yes, DFE and deferment have been discussed, and it was clipped. Take her for coffee and then ice skating. Makes chicks get into the rom-com mindset and gives the icebreaker to make some physical contact and have a few laughs, which helps. It's a great ice. The last time I went ice skating with a girl, she broke her coccyx. And then playing with mine was off the table. So, not a great idea. No extreme sports. Yeah, drop an F in chat. It was terrible. I spent 30 minutes in an emergency room before I realized I didn't give a shit. Worst day ever. Need a small round glass table at the house to turn the conversation to cards. Maybe brag about your poker skills. The rest happens naturally. Oh boy. Ask a room full of dudes that cream their pants at the first sight of a female reporter for dating advice. What could go wrong? Absolutely nothing. If anything, you could just learn everything not to do, right? And they say chivalry is dead. It is. I'm pretty sure I killed it that day. It went out quietly. Have you shown her your duck folder? Now that's an icebreaker. Was she broke her coccyx skating? Probably not great in bed. Well, I'll never know. Ask her if she believes the DTCC committed international securities fraud. That's a qualifying question. You can find out if you're wasting your time. God, why isn't this over yet? Oh shit, I forgot to buy calls. $38.50? It's a nice tight strangle. Just tell her about your tight strangle, Trash. Just be like, has anyone ever strangled you so hard you could feel the theta slowly slipping away? That won't creep anyone out. She was 26, I believe. I don't know if she actually broke it. I didn't hang out in the emergency room long enough for the x-rays. But she was really whiny. I can't walk. I have to lay down in the cab. Which is gross. If you've never been in a New York City cab, that's disgusting. Short of a gunshot wound, I would never lay down in a cab. Ding ding! The day is done. Well, the SPX managed to go up like 180 BPS today and then trade within a $5 window from 11:55 to 4 o'clock. That was fantastic. Hopefully Jamie fucking Diamond rolls his collar tomorrow and we don't have to deal with this shit anymore. Upstart moving up into the end of the day with a nice 8% increase from yesterday's lows. Jimmy also up today, 2%, and Fubo as well, 3%. So we're starting to see a bit of a turnaround. A little less attractive to roll that short through the intraday as we move into the end of the week. And there's more expansion in gamma as we approach expiration. They don't want, I think whoever's shorting doesn't really want volatility to pick up too much, but they do want it to slowly increase. Volatility on GME dropping off today a little bit. I think we're going to see a little bit of crush. Still a decent time to position. We'll see how the deferrals play out. I'll try to get that video all cut up and out to you guys a little later today, and that way you can reference the thesis, or at least listen to what I say and then misquote it later. But everything's looking pretty nice. Interesting move into the end of the week. I think liquidity is still really tight across all of these, and we're due for a run. It's just not happening yet. So do with that what you will and decide on your own positioning. Diamond Hands, he's such an asshole. Anyway, thank you guys for tuning in. Trash, good luck with your date. Take none of the advice you heard here, except mine, because it's amazing. And I'll see you guys bright and early tomorrow morning, 9 a.m.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle themed fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Sit, Krian, sit. Good dog.
Hydrate!
Hydrate.
Did you get any of that?
It's a good show.
Not an advisor. Frigulon.